Settle in. Ladies and gentlemen, may we kindly request that you make your way into the main event area as we are about to begin. Please take your seats and settle in. Ladies and gentlemen, may we kindly request that you make your way into the main event area as we are about to begin. Please take your seats and settle in. Ladies and gentlemen, may we kindly request that you make your way into the main event area as we are about to begin. Please take your seats and settle in. Ladies and gentlemen, may we kindly request that you make your way into the main event area as we are about to begin.
Might I kindly please ask you to take your seats? We're going to be starting in the next 10 seconds. If I can ask you to kindly please take your seats as we expect our dignitaries to walk through the door at any moment now. Thank you so very much. Once again, if you're in the room, might I kindly ask you to kindly please take your seats. Our dignitaries are walking in at any moment now. If you're still upstanding, this is a kind request from myself that you might kindly please take your seats. Thank you so much. We are preparing to receive His Excellency, the Deputy President of the Republic of South Africa. As he walks in, might I request of us to please be upstanding? Thank you very much. Won't you please oblige us by rising? Distinguished guests, if I may request of you to remain upstanding as I welcome Chris Munutwa to lead us in singing the national anthem. Thank you so very much. Chris, it's over to you.
Chabasa Jesu oferise dintwa le matshwenyeho usibuluke si chabasa Jesu si chabasa South Africa 80 die blå van onze hemel, 80 die diepte van ons heen. Voor ons eeuwige geberders, waar die kranse antwoord geen. Sounds the call to come together, and united we shall stand. Let us live and strive for freedom in South Africa land.
You may take your seats, distinguished guests. As we kick off today's proceedings, allow me, before I begin with the salutations and acknowledging, that perhaps we start off by turning our attentions to the screen and locate ourselves through this short audiovisual experience. Thank you so much.
Welcome to Gauteng, the economic heartbeat of South Africa and Africa's gateway to global commerce and innovation. Home to a dynamic population, world-class infrastructure, and a thriving business ecosystem. Gauteng is a region of endless possibilities. At the forefront of this growth is the Gauteng Growth and Development Agency, GGDA, the implementation arm of the Gauteng Department of Economic Development, with a mandate to drive sustainable job creation and inclusive economic growth The GGDA is transforming Gauteng into a globally competitive city region.
Gauteng is open for business. We offer unmatched opportunities in a stable, growing, and dynamic environment. With government support, world-class infrastructure, and access to African and global markets, investing in Gauteng is the right choice for sustainable growth and success.
South Africa has good, strong trade relations with a number of different regions. We've seen regions like the EU really stepping up and saying they want to deepen relations with South Africa. We have seen regions like the East China. We've got representatives actually from China in the room today who are saying they want to pledge, they want to deepen their investments in South Africa. And I think South Africa needs to be open for business with whoever wants to work with us. Agro-processing is a key driver of the Gauteng economy, but also of the South African economy, one might argue. It's also a key anchor for the African Continental Free Trade Agreement. And South Africa obviously has a critical role to play in that. A significant portion of the continent's agro-processing takes place right here in Gauteng, and we benefit from, our well-established road and rail networks, infrastructure in general, as well as, facilities, factories, and industrial areas. So we're quite well advanced as far as that goes, and I think that we're well poised to actually capitalize on that. So our focus is on driving sustainable job creation, which can only be possible through industrialization and driving areas and sectors of the economy that are labor intensive. And again, agriculture and agro-processing presents a fantastic opportunity for this, particularly in our peri-urban and more rural economies within Gauteng. So it's very exciting from that perspective. And I think there's a lot more opportunity with forums like this, where we can actually consolidate investments, where we can bring, all the stakeholders in the room to help unblock some of those red tape blockages, regulatory blockages, etc. I think we can really supercharge employment and supercharge industrial development in the province.
Ladies and gentlemen, I would say that deserves a round of applause. Thank you very much. Deputy President of the Republic of South Africa, His Excellency Paul Mashatile, the Minister of Trade, Industry and Competition, the Honorable Park Stow, the Premier of the Gauteng Province, the Honorable Panyaza Lesufi, members of the Executive Council, members of the Provincial Legislature, executive mayors and deputy mayors present with us today, speakers of council and members of the mayoral committees, the Dean of the Diplomatic Corps, who's with us today, His Excellency Ambassador of the State of Eritrea. That is, of course, His Excellency Salih Omar Abdu. In addition to this, there are many excellencies in the form of ambassadors and high commissioners that have joined us. Allow me to acknowledge Her Excellency Madame Darama Yildirim, Ambassador of the Republic of Turkey. His Excellency Mr. Gormley, the Ambassador of Ireland. Allow me to also acknowledge His Excellency Mr. Rod Remendyamba, that is the Ambassador from Gabon. Allow me to acknowledge the Nigerian High Commission, who is also here in his capacity as Acting Ambassador. That's His Excellency Mr. Alexandra Temitope Ajayi. Allow me to acknowledge Her Excellency Ambassador Romana Königsbrunn from Austria. Distinguished guests, ladies and gentlemen, in our presence, we also have Consul Generals. Allow me to acknowledge the Consul General of China, that is Pan Qingjiang, and the Consul General of Botswana, Madame Kutlo Chelinyana. In our presence this morning, we have investors, sponsors, directors general, heads of departments, city managers and municipal managers, CEOs, of course, media colleagues all around the room, leaders of the business community, ladies and gentlemen. I believe that I have covered the protocol for every single person who's going to come and speak here today. Thank you very much. Allow me to welcome you to the Gauteng Investment Conference. My name is Nozipho Shabalala, and it is an absolute privilege and an honor to be back with you again this year and to serve you in my capacity as program director and moderator of some of the panels. Just last week, there are many faces here that were with us together at the South African Investment Conference as we engaged and grappled with questions of investment, of growth, and of capital. Today, we get to continue that conversation and bring it a lot closer to where execution really happens. Because while we know investment strategy can be set at a national level, it is realized provincially and indeed locally as well. I also know that in this room, no one needs convincing or reminding that Gauteng is not just another province in South Africa. It is the center of gravity of South Africa's economy and a critical gateway onto the continent. And that's what makes this moment critically important. We're not here to conference. We're not here to talk shop. We're here to do the work of strengthening Gauteng's position as a leading economic hub. My job right now is to ensure that the experience is as optimized and enjoyable as possible. So please indulge me as I take you through just a few of the housekeeping notes before I invite the very first speaker to come and extend his official welcoming remarks. The first thing that I'd like to bring to our attention is that I'm going to ask the technical team to put up on screen the Wi-Fi code so that you are connected. But more than that, if you see the QR code behind me, that QR code links you to the app that we're using throughout the day. Now, the significance of the app is that you not only have the program, but you also have live notifications if there are any changes to the program. You have the opportunity to read the full bios of all the panelists and all the speakers and all the moderators that are going to be here with us. One of the features that I absolutely loved is that it also gives you some interesting places to visit in Gauteng. So it's a fully comprehensive experience. And allow me to add this additional functionality. We would like you to have a share of voice in today's conversations. And to do that, for sessions where there's a Q&A, I will remind you to kindly go into the app, to go into that session, and to submit your question or your comment through the app. We will not have roving mics, ladies and gentlemen, but we will have an app that allows us all to be in a singular conversation. And that, of course, reminds me that we also have a very large virtual audience that is connected and is streaming this conversation live. And so if you're joining us virtually, allow me to extend an invitation to you to kindly put your comments and your questions in the live stream chat, and we will try to the best of our ability to integrate your voice into the conversation. I think my final request this morning is anchored in the theme that brings us together. Hashtag growing Gauteng together. This is a conversation that should not, could not, and must not die within these four walls. So over and above a very action-orientated conversation, I'm going to ask that we use this hashtag to amplify and to bring this particular message to the world. Hashtag growing Gauteng together. And so my final request, and I've had a lot of requests this morning, is that you please take the time to go and visit the exhibition on the High Street. We have some phenomenal entrepreneurs from the Gauteng region that are showcasing their wares, and we would love to have you support the enterprises that are part of this conference today. Ladies and gentlemen, now to extend the official welcoming remarks, it gives me such a great pleasure that we might welcome His Worship Dada Morero, the Executive Mayor of the City of Johannesburg. Might we give a warm round of applause?
Good morning, Program Director, Ms. Shabalala, and thank you for affording me this opportunity to welcome the delegates. And thanks for the organizers for a proper pulpit. Most sessions, when I get there, the pulpit is higher than my height. I'm therefore forced to speak outside of the pulpit. Thank you very much to the organizers for being considerate of those of us who are vertically challenged. The Program Director, Honorable Deputy President of the Republic of South Africa, Mr. Paul Mashatile, Honorable Premier of Gauteng, Mr. Panyaza Lisufi, honorable members of the Executive Council, distinguished ministers and deputy ministers who are here, high commissioners, ambassadors, and consular generals, the executive mayor of the city of Tshwane, our capital city, executive mayor Nasipi Moya, and I also like to take this opportunity to congratulate you on the appointment as a member of the UCLG Africa. Leaders of business, investors, development finance institutions. Ladies and gentlemen, on behalf of the city of Johannesburg, it is my distinct honor to welcome you to the Gauteng Investment Conference 2026. It is a privilege for Johannesburg to host this gathering at a pivotal moment when the trajectory of the African economic growth is being shaped by strategic investment, infrastructure development, and deeper regional integration. Johannesburg has long been the economic gateway of the Southern Africa, and today it stands as the financial, industrial, and logistic hub that seamlessly connects African markets to global markets. However, we recognize that the next phase of growth demands deliberate strategic partnerships amongst government, business, and investors. This conference is therefore a testament to a collective ambition. It signals an unwavering confidence in Gauteng as Africa's premier investment destination. It affirms belief in the resilience and immense potential of our economy. Most importantly, it reflects our shared commitment to transforming opportunities into bankable projects, projects that drive growth, create jobs, and broaden economic inclusion. Today's discussions focuses on the sectors that will define the next chapter of Gauteng's development, which would include infrastructure investment, digital industries, manufacturing, logistics, tourism, and urban regenerations. These are not abstract priorities. They are the bedrock of our modern, competitive regional economy. As the city of Johannesburg, we are steadfast in our commitment to creating the conditions that attract and sustain investment. This entails strengthening infrastructure delivery, enhancing the investment climate, and forging partnerships that unlock new economic activity across our city. We are improving the ease of doing business by streamlining processes and reducing bureaucratic delays, and of course, enhancing cross-departmental coordination. We are prioritizing infrastructure maintenance and renewal, recognizing that reliability is critical to expansion. Through the Johannesburg Property Company, we are unlocking strategic land parcels and bringing prime locations to the market for catalytic development. Furthermore, we are advancing reforms to trading services in partnerships with National Treasury to galvanize support for infrastructure development. We are also investing in inner city regeneration, transforming underutilized spaces into vibrant economic nodes that attract both investment and people. Investors demand certainty, credibility, and capable institutions. Our duty as government is to build and sustain these essential foundations. This conference therefore comes at a defining moment. Across Gauteng, we are actively unlocking large-scale infrastructure pipelines, property developments, digital economy investments, and industrial expansion opportunities that will shape the region's economic trajectory for years to come. Yet investment is not solely about capital. It is about bringing partnerships that expand opportunity for our people and communities. It is about fostering innovation that enhances productivity and competitiveness. Above all, it is about positioning Gauteng and Johannesburg as globally connected economic centers within the African continent. Gauteng remains the economic heart of South Africa and one of the most dynamic metropolitan regions of the continent. With the leadership of the Premier Panyaza Lesufi, the support of the national government through the presidential working support package, and the participation of investors and partners gathered here today, we are confident that the engagements at this conference will translate into real investment commitments and tangible economic impact. I wish you productive deliberations, impactful engagements throughout the day, and once again, on behalf of the City of Johannesburg, we are honored to have been given this opportunity to host this conference in the economic hub of South Africa, a real metropolitan city that gives reflection of different nations that have come together to build our country and our continent. And once again, I welcome you all to the Gauteng Investment Conference 2026. Thank you.
The Executive Mayor, Councillor Morero, thank you very much for the reminder that as we settle into the conversations of the day, that investment is a lot more than just about capital. It is about being intentional about the partnerships that brings those investments to life. It is about being intentional about putting people at the center as the true and ultimate beneficiaries of all that we do. And it is about being intentional that the work connects us more meaningfully to the African continent. It's a great way for us to then leave these welcoming remarks and to build on them by inviting our next speaker, who gets to do the job of setting the scene for us. This, of course, is the job, obviously, has always gone to MEC Lebogang Maile. We invite him with two hats today. One as outgoing MEC for Finance and Economic Development, and an MEC now for Education, Sports, Arts, Culture, and Recreation. Can we give him a big round of applause? Nice to see you. I'm good.
Yeah, I see Program Director, you have been speaking to the Premier, because that's his concept. That's how he introduced me this morning to the Deputy President, that I am the outgoing MEC for Finance and Economic Development. Let me take this opportunity to thank you, Program Director. We were gossiping about you with Dimdu, and we're saying you have now monopolized this this title of a Program Director for our events. I mean, we remember from many years back when Premier Makura was the Premier here. We also want to thank His Excellency, the Deputy President of the Republic, our Republic, His Excellency, the Premier of the Gauteng Province, His Worship, the Executive Mayor, the City of Joburg, the MEC responsible for economic development, MEC Ramokgopa, other MECs who are here today, other mayors who are here, MMCs, members of the provincial legislatures, the Dean of Ambassadors, ambassadors, high commissioners, consul generals, chairpersons and CEOs of our boards and agencies, members of our boards, senior government officials from all levels and agencies, finance institutions. I've seen the platinum sponsor, Standard Bank, We are asking you to give us more money now for school sports. I need money for school sports. So Standard Bank, I'm fundraising for school sports. Private sector leaders, ladies and gentlemen, it is both an honor and a responsibility to stand before you today to set the scene for this year's Gauteng Investment Conference, a platform that is no longer simply an event in our calendar, but a central instrument in how we drive economic growth, mobilize capital, and translate policy into implementation. We gather here at the time of both urgency and opportunity. Globally, capital is becoming more selective. Investors are no longer responding to ambition alone. They are responding to credibility, to governance, to execution capability, and to the ability of regions to convert opportunity into tangible outcomes. And that is precisely the shift we have made in Gauteng. When we convened the inaugural Gauteng Investment Conference in 2025, we did so with a clear objective to reposition Gauteng as a credible, structured, and execution-driven investment destination. The outcomes were significant. Over 1,800 participants. We raised 312.5 billion in investment pledges, a strong signal to both domestic and international markets that Gauteng is open, organized, and ready to partner. But as we have consistently emphasized, investment conferences are not judged by what is announced. They are judged by what is delivered. And it is in this regard that Gauteng is beginning to distinguish itself. We have moved decisively from pledges to projects. As of this year, a meaningful portion of those commitments has already entered implementation, unlocking tens of billions of rands into the real economy, into infrastructure, into industrial capacity, into energy systems, and critically into jobs. This is not incidental. It is the result of a deliberate model, a model that treats investors not as once-off engagement, but a life cycle. From project origination to preparation, to packaging, to investor engagement, to facilitation, and ultimately to delivery and aftercare. And it is this life cycle approach that defines the Gauteng Investment Conference. Gauteng Investment Conference is not an add-on initiative. It is a force multiplier. It is the platform through which we integrate project preparation, intergovernmental coordination, investor engagement, and capital mobilization into a single coherent system. It is how we operationalize the Gauteng economic plan. Because the reality we face is clear. Gauteng remains the economic engine of South Africa, contributing approximately a third of a national GDP and serving as the primary gateway for trade into the continent. We are diversified, industrialized, and globally connected. But we also operate within a broader structural context. South Africa's investment levels remain below what is required to sustain long-term industrialization. Infrastructure must be modernized at pace. Energy systems must be stabilized. And across Africa, competition for capital is intensifying. At the same time, the global economy is undergoing a profound shift. Supply chains are being reconfigured. Capital is moving towards high-growth emerging markets. Investors are seeking regions that offer not just opportunity, but clarity, clear pipelines, clear governance, and clear delivery pathways. And this is where Gauteng is positioning itself. The Gauteng Investment Conference 2026 is designed as Africa's premier subnational investment platform, structured not around presentations, but around transactions. It is a platform that brings together global investors, African governments, development finance institutions, banks, municipalities, and the private sector into a curated deal rooms, sector dialogues, and policy engagements designed to move from conversation to commitment and from commitment to implementation. This year, we are elevating the model. Our objective is clear: to mobilize at least, and hopefully MEC, you will announce the good news, 200 billion in the new investment commitments, backed not by aspiration, but by a structured pipeline-driven approach. We are focusing on high-growth, future-facing sectors: advanced manufacturing, logistics, digital infrastructure, renewable energy, green hydrogen, agro-processing, and the creative economy. We are strengthening intergovernmental coordination, ensuring that national, provincial, and municipal pipelines are integrated into a single visibility platform so that investors experiences one government, not many. We are deepening our continental partnerships through the Gauteng Pan-African Economic Partnership mobilization, aligning with AFCTA and Agenda 2063 to build cross-border value chains and position Gauteng as the gateway to Africa's industrialization. And critically, we are institutionalizing aftercare because the real work begins after the conference. It is in approvals, in regulatory facilitation, in unlocking finances, in resolving bottlenecks, in ensuring that projects move quickly, efficiently, and at scale. Program Director, I'm left with 25 seconds, don't worry, I'm concluding. If there is one, I'm watching the time. If there is one message we want to leave at the outset of this conference, it is this: we are moving from mobilization to institutionalization, from once-off events to a system of continuous capital formation, from fragmented initiatives to an integrated investment architecture, from ambition to execution. And that this matters not only for Gauteng, but for South Africa, and indeed for the continent, because if Gauteng succeeds in building a credible, scalable, and replicable subnational investment platform, it provides a model for how African regions can compete globally, not as isolated economies, but as integrated investment-ready ecosystems. To our investors and partners in the room today, we are not presenting a wish list. We are presenting structured opportunity, bankable projects, aligned policy frameworks, coordinated institutions, and administration committed to delivery. Thank you very much.
MEC, thank you very much. I never thought that an investment conference would sound so poetic as well. I don't know if you caught some of those magical sound bites that the MEC shared with us. We are not building on aspiration. We're building on an evidence-based pipeline approach. We are moving from pledges to projects. This is not a wish list. This is structured opportunity. So to my media colleagues, I think the sound bites for the day are already done. Thank you very much, MEC. Let's give him a big round of applause, please. Ladies and gentlemen, we move now into a dialogue, a conversation with the Premier, where we're answering the single important question of what does it really take to build a high-performance economy. And so might I ask you to please help me welcome Premier Lesufi as he joins me up on stage. Thank you so very much. So good to see you. Premier, thank you very much for joining us and for making the time to have this sit down. We have and we will continue to hear many sound bites about the significance of Gauteng, not only for South Africa from an economic perspective, but certainly for the continent as well. I spoke about it as being a center of gravity. We've heard it's a heartbeat. And I think there are many, many, many descriptions that we could use. But there's also a reality where growth has been somewhat slow, where investment could be better, where there are some structural weaknesses that remain stubborn and are not shifting as quickly as we might hope them to be. So fundamentally, what needs to be true for Gauteng to transition effectively into a high-performing economy?
Thank you so much, and thanks for the opportunity. Let me also add my voice in welcoming our Deputy President and everyone that is here. We just have to do the basics.
Sure.
We just have to do the basics and level the playing field and ensure that everyone is comfortable to come to Gauteng and do what they need to do. And I always say, if you are the epicenter of crime, epicenter of lawlessness, epicenter of destruction of infrastructure, no one will come to invest here. So it's extremely important that the basics are done, but most importantly, we build the capacity of the state, because it is the state that must drive these opportunities. It's the state that must enable environments that will make people to come and make a meaningful contribution. That is why I'm excited with the number of people that are here. I'm excited with the pledges that were made last year. I'm excited with the rollout of those pledges. It means that you are doing something right, and for that we are very grateful. That's how you push an economy, and that's how you ensure that everyone plays their own role. Just do the basics, and the rest shall follow.
Let me push you a little bit on that, Premier. If there were 3 basics that you feel are non-negotiables that we should be doing better in Gauteng, what would those 3 basics be?
I always tell the people that government must do what government must do. And our function is nothing else but public good. If we don't do what public good should do, then the private sector will take over because the state is not pushing where we need to push. I want to start with the first one, which to me is very key and very fundamental. It's skills development.
Sure.
If we can't have the next generation that will provide the skills that are needed by the private sector, that are needed by the public sector, forget. That is why education plays a very key important role. Secondly, ensure that infrastructure is what we need to do, because it's the infrastructure that drives the economy.
Yeah.
I'm glad that the executive mayors of 2 important cities, Johannesburg and Tshwane, are here. Because if we don't have the basic infrastructure, if people want to build a factory, they must not struggle to get water. If people want to build a factory, they must not struggle to get electricity. If people want to build opportunities that will prosper, they must not struggle to get the basics from our municipalities. So infrastructure becomes another area that we just have to ensure that we get it right. Thirdly, is the capacity of the state. And I'll emphasize that point, because if you can't have the capacity to respond to the needs, why invite people to your table? It's only when you have the capacity to respond to their needs, direct their needs, protect their needs, and show them the path, we will be in a position to ensure that we expand. So those basic things, to me, are extremely important. And I'm excited that if you see the team that we have amassed, that is working extremely hard, and check the number of investments that are going to be announced today, you can see that we are going somewhere, because we need just to take Gauteng to the next level. And we do so, then we'll be in a position to take South Africa to the next level.
You've made a beautiful link to my next question, which was really to connect Gauteng to the South African ambition, and from there to the continental ambition. And the golden thread, it seems, across all of these is that we are pushing for a higher growth path. Talk to us a little bit more about that, Premier. Maybe bring into the conversation the Gauteng plan, which really is at the epicenter of our conversation this morning.
A month ago, we unveiled our growing Gauteng plan. And we deliberately named it a Gauteng city region, to say it's not about our province alone. You bring municipalities, but at the same time, contribute to the priorities of the state of our country. Because those 3 priorities are very important. To grow the economy, build the capacity of the state, eliminate the cost of living, but most importantly, ensure that the stakeholders that are going to make things possible to us, their demands and their aspirations are met. So our strategy of growing Gauteng, we've got almost 6 pillars, but the key one, which is the innovation part, the ICT part, the infrastructure growth part, and the skills development part, will assist us to reposition our province to contribute to the growth of our country. Remember, if Gauteng can't grow, it's extremely difficult for South Africa to grow. Sure. And if South Africa doesn't grow, our continent will not grow. So the interrelations of these important segments of our society must be harnessed, must be supported, but at the center of everything is our skills revolution. Skills of the future allow innovation to prosper and emphasize the key issue, which I always emphasize, is that Stone Age didn't end because that generation ran out of stones. Stone Age ended because new ideas were planted. We have to be the hub of new ideas. We have to be the hub of innovations. We have to be the hub of attracting new ideas, new investment, and this forum has created and laid a very strong foundation, and it's very, very important that for us, we take it just to the next level.
Premier, I think that's, firstly, I would expect a round of applause. I think that your responses are really, really spot on. We're going to get the energy up as we go along, but what you've done beautifully is just shine the spotlight on the pillars for us and then highlight almost what I would describe as some of the priority pillars.
Yes.
The plan also speaks a lot about capital formation. Yeah. And for me, I would imagine that there has to be a commitment to doing something differently in order to realize the capital formation that we are chasing. What can we expect that is going to be fundamentally different from the way we've done things before?
You will see, I think we'll be the first province, and I'm glad that MEC Maile laid that foundation. We will be the first province to run with public-private partnership. It has worked. There is a huge investment that was made almost 15, 20 years ago on the Gauteng. It was 26 billion. As I'm speaking to you now, it's hovering around 48 billion rand. It's now in the hands of. We want to expand that. And in expanding that, we intend to create almost 150,000 jobs. But we also want to bring new innovative infrastructure realignment. We need a speed train to go to Limpopo. We need a speed train to go to KZN. We also need to level up our infrastructure in terms of roads. You will see our new master plan, road master plan, transport master plan. It harnesses the new form of transport that we really believe that will unlock opportunities. But we also want to take advantage of the growth of other provinces that are closer to us. There is no way that Rustenburg in Northwest can grow to Mafikeng. It has to grow towards Gauteng. And there's no way that Sasolburg in Free State can grow to Bloemfontein. It must grow towards us. Limpopo as well must grow towards us. So we want to harness and take advantage of that so that we can be a city region that has the capabilities to influence the growth of our neighboring provinces, and we can source the benefits out of that. So this is the approach that we think is proper, and we really believe that those that are here now will share the same ideas with us, but most importantly, sharpen it through our private-public partnership, because the private-public partnership have been made easy by National Treasury. Anything less than 2 billion does not have to go through a red tape. As the province, we can take a decision immediately. You will see, we'll be making lots of announcements of the triple Ps that we want to take to the next level in our province.
Premier, as you speak about the possibility of the other cities nationally growing towards Gauteng, the natural question that comes to me is to say, and at what point do we begin to look at those city-region connections with the rest of the continent, firstly within the region and then the rest of the continent? MEC Maile spoke about the African Continental Free Trade Area, and of course, a big challenge is how do we make sure that this is not just an agreement, but is realized in real relationships at city-region level as well. What is your view on the kind of progress we should be pushing for in that regard?
The continent is calling. We have to take advantage of that. And I'm excited that the executive mayor of Tshwane has been elected to be part of that. We share, we are the secretariat of the conglomerates of African cities. We are playing that meaningful role. So Africa is open for business. But you don't just open for business. You deposit ideas, you deposit innovation, you deposit creativity, but you also bolster relationships, because you can't do that if you bully people. You can't do that if you think you are superior. We do that when you say we are one, we are together, we have a shared vision, and it's out of that shared vision that we can grow our continent. We are quite excited with the opportunities that the African continent is creating. We want to play that meaningful role because we are at the center of it. If we don't do it, no one will do it.
Absolutely, and I'm reminded as you speak about those relationships out of South Africa with the rest of the continent, that we often get described as a big brother, and it is a consciousness not to brother as much as you are big, and not to actually choose one or the other when it suits us best. Let me come to the question of industrialization, or reindustrialization rather, because I would imagine that this is a conversation that is alive across the continent. The plan is also very clear that this is central to building a high-performing economy. Talk us through what we can expect from a reindustrialization push, some of the changes or projects that we can anticipate.
I'm truly excited about that, and I'm glad that the Minister, Pakstar, will be here in the afternoon just to unpack it deeply. But you will see the number of special economic zones that we are now launching in our province. We have concluded the one of OR Tambo. We are now getting the go-ahead in terms of the Val SEZ. We are looking at the Lanseria one. And the Pretoria one, this one has been a model for the country. And if you can check, of all the special economic zones that we have across the country, is the one that are in Gauteng that are functional. Is the one in Gauteng that have really met the desired outcome. So as soon as the Minister comes later on to unpack our industrial strategy, our pact, and the way that we want to push the industrialization of our province, you will see that indeed we are making a huge dent in that regard.
Thank you very much, Prem, and we certainly do look forward to that conversation with the Honourable Minister. One of the things that have been said at the stage already, and I'm not sure if it was the Executive Mayor or the MEC, the emphasis on people, that this is not a conversation just about capital and transactions. Essentially, this is about people. And so there are two things that come to mind with regards to that question. The first one is if we look at Gauteng spatial inequality and how that becomes a central bottleneck that needs to be addressed so that we can reimagine that spatial inequality in the province. I'd love to hear your thoughts on that, but also how do we ensure that even as we push for higher growth, that remains inclusive as it has been the drumbeat of what it means to be South African for the longest time?
I'm on record that I get easily excited when people want to come to Gauteng. I know many government departments fight to say, our schools are full, hospitals are full, and many other things. I get excited. It means people prefer us. And if they prefer us, we just have to plan appropriately. And we must attract those that will also create opportunities. We must attract those that will build the province. We must not only attract those that need to get something out of our province. So I get highly excited, I must be honest, when people say, I want to come to Gauteng. So we are not ready to put a poster at the entrances of Gauteng and say Gauteng is full. Gauteng will never be full. We want our people to come here to create opportunities. And if people choose our schools, it means that we are providing quality education. If people choose our hospitals, it means we are providing quality healthcare. What we need to upgrade and populate is our planning capabilities so that we are not caught off guard with this number of people that now we have an idea of how many people wants to come here. And people drive economy. People drive opportunities. I was meeting with the provincial commissioner to say there are two cities that if we can get them to be a 24-hour cities. I mean, Sentin is our is our economic hub, is our economic market. We're hosting Live Golf. We had almost 100,000 coming here. They asked me, Premier, where can we go after golf? They came to Sentin. The shops were closing. That's not, you don't push economy in that particular fashion. You go to Midrand. It's a cosmopolitan city of young people. But after 7 o'clock, all entertainment places are closed, purely because we are scared of crime and others. So the ability to manage people, the ability to support, the ability to create centers in which they will feel that they are welcome in our province, to us is a very important approach that we have. So People push economy. Let's channel them to appropriate centers and ensure that they are safe and they are supported and that the economy can start to pump. We want to be the home of big matches, the home of big events. G20 demonstrated. I mean, after G20, you will see the investment that was left behind. We now have Live Golf. We've signed Live Golf to come back again. There is a popular motorsport that people have been yearning that it must come to South Africa. I'm living with the Minister of Sport in 2 weeks' time to go and lobby. And hopefully, if we win, it will be the first time that it comes back here in our continent. And these are kinds of events that we really believe that push the economy.
So 2 quick questions, Premier, just before we wrap, because you've spoken about state capacity quite a lot. And capacity is important, but coordination is probably equally important. What do you think needs to change in how we currently are coordinating across departments and government departments in particular to ensure that we are singing from one hymn sheet and there is an alignment in terms of where we're all going and what we want to get out?
It's joint planning and joint budgeting and capacity to monitor. So intergovernment relations, and it has improved. I'm grateful to the executive mayors that are here. It's a demonstration that intergovernment relations works, because if we can't plan together through the DTM model with national government, if national government does not know where we are going, and if local municipalities are not aware where we want them to go, then we'll not have a system of governance in our province. And I was excited to hear the executive mayor of Johannesburg to say that eliminating red tape, because it's municipalities that must convert all the pledges that are going to get them. Because if municipalities can't give that support, then we are not going to be in a position to give that support as a province. So IGR, intergovernment relations, but most importantly, the ability to plan together, the ability to paint a picture of a new Gauteng that we want, that can be shared by everyone, is the way to go. And I'm quite excited that thus far we are doing exceptionally well with all the institutions that we have in our province.
And of course, this conversation would be completely incomplete if we didn't pull in the role of the private sector as you see it. I love the language, I even called it poetic, that MEC used, this idea of a structured opportunity. Where are the structured opportunities for private sector to step into a lot more aggressively, a lot more actively? How do you see private sector really becoming a fuel behind some of the things that we've spoken about today?
That's the lifeblood of opportunity. That's the lifeblood of growth. That's we want to create an environment where we are the preferred destination. And you can see from the pledges that were made during the Presidential Investment Conference, the pledges that are getting here, that people want to come to Gauteng. The only thing that we need to do is to create an environment to be conducive for those opportunities. And to have all the MECs that are here and the executive mayors here, it's a demonstration that we are ready to make business, we are ready to interact, and where there are blockages, we are also ready to ensure that the infrastructure is ready to accommodate opportunities. And I want to thank them for coming, and I want to thank those that have made pledges. I want to thank those that are coming from the second time. We are here to grow Gauteng together. And if we grow Gauteng, we definitely grow South Africa.
Premier, thank you so much. I don't think we could have ended that conversation on a better note. A very big thank you, Premier. Yes, we can give him a big round of applause. And the call to action there is we are here to grow Gauteng together. Now, Premier, I'm going to descend off stage and I'm going to give you the honor of introducing His Excellency, the Deputy President, as he comes up to do his keynote address. I would invite you to kindly please do that at the podium. Thank you so much, sir.
Thank you so much, Meshabalala. We want to take this opportunity to really introduce somebody that is a friend of our province, somebody that supports us at all times, somebody that is always there when we need his ear, when we need his advice, when we need his counsel. He's a former premier of our province, but most importantly, he's now the Deputy President of our country. Let's rise to welcome the Deputy President of the Republic of South Africa, His Excellency Paul Mashatile. Thank you so much.
Thank you very much. You may be seated. I was complaining to MEC Maile that after he had spoken, he dismantled the system. So next time. Thank you very much, Program Director, Ms. Nozipo Shabalala. Honorable Premier of Gauteng, Mr. Panyaza Lisufi, Ministers and Deputy Ministers here present, the Executive Mayor of the City of Johannesburg, our host, Councillor Dada Morero, the Executive Mayor of the City of Tshwane, our capital city, Councillor Nosipi Moya, MEC for Economic Development, Ms. Vuyiswa Ramukopa, the incoming, and MEC for Education, Sports, Culture, and Recreation, Mr. Lebogang Maile, the outgoing, CEOs of state-owned enterprises from the national government and those from the provincial government, members of the diplomatic corps, leaders of business, finance, labor, and civil society, distinguished guests, ladies and gentlemen, good morning. Dumelang, Abshin, the Machero. It is an honor to return once again to address this prestigious gathering following the inaugural Gauteng Investment Conference in 2025. This conference takes place at the defining moment of our country and our economy. Just over a week ago, South Africa successfully hosted the 6th South African Investment Conference, where government, business, and our international partners secured a record investment commitments of approximately 890 billion rands in a single day. These are the largest pledges achieved since the investment drive began in 2018, lifting cumulative commitments well beyond 1.5 trillion rands and promoting government to set a new national investment ambition of 3 trillion rands over the next few years. The significance of the South African Investment Conference lies not only in the scale of these commitments, but in what they represent. A firm vote of confidence in South Africa's reform trajectory, policy certainty, and in our constitutional democracy anchored by the rule of law. However, investment conferences are not ends in themselves. Their true value lies in delivery, in translating commitments into projects on the ground, into factories, infrastructure, energy capacity, and above all, jobs. It is precisely at this point of delivery that Gauteng assumes its central role. As the economic heartland of South Africa, contributing the largest share of our national GDP and serving as a gateway to regional and global markets, Gauteng stands as a primary platform through which many of these national investment commitments will be implemented, expanded, and scaled. The South African Investment Conference set the national direction. The Gauteng Investment Conference takes that forward by localizing investments, accelerating execution, and removing obstacles at project level. This ensures that the national vision is not only articulated, but lived in the daily realities of growth, opportunity, and jobs. Many of the commitments announced at the South African Investment Conference across advanced manufacturing, the energy transition, logistics, digital services, infrastructure, and industrial localization align directly with the Gauteng's competitive strength, which are its industrial base, financial systems, skilled workforce, research institutions, and also world-class connectivity. This conference therefore serves as a distinct and complementary purpose. It moves us from national pledges to provincial pipelines, from policy certainty to site readiness, and from investor intent to operational delivery. In doing so, it transforms national ambition into provincial action, ensuring that Gauteng stands as a proving ground where investments becomes impact and where the story of South Africa's growth is written in the lived experiences of the people. Through the Gauteng Investment Conference, we are saying clearly to investors, South Africa is open for business, and Gauteng is ready for execution. We are determined that Gauteng will lead by example in shortening regulatory timelines. And I'm happy that I had both the Premier and the MEC emphasizing that because it's important that we should not allow bureaucracy to delay implementation. By ensuring coordinating across spheres of government, crowding in private capital, and supporting investors across the full project life cycle so that commitments translate into measurable economic impact and inclusive growth. Consequently, Gauteng will not only advance the outcomes of South African Investment Conference, but will give concrete expression to our national objective of investment-led growth, job creation, and economic transformation. As we reflect on the theme, that is, reindustrializing Africa's gateway through investment, innovation, and integrated growth, we are reminded that we must exploit the engines of industry, channel the lifeblood of investment, and ignite the spark of innovation. Gauteng's role as Africa's gateway should not only be defined by economic weight, but by its ability to create opportunity for all our people. Reindustrialization is a practical, forward-looking strategy. It recognizes that productive capacity is a foundation of sustained growth. It must result in technology-driven factories, expanded industrial output, revitalize industrial parks, and special economic zones, strengthen local supply chains, and dignified jobs at scale. But let us be clear, the industrialization we pursue today is not the industrialization of yesterday. It is a new industrialization built on 4 critical pillars. The first one, without reliable energy, efficient logistics, water security, and modern digital infrastructure, industrialization cannot take place. That is why government continues to invest in stabilizing and expanding energy supply, improving rail and port systems, and strengthening water and logistics infrastructure. These are the foundations of industrial growth. Second, the future of industrialization is as digital as it's physical. Data centers, artificial intelligence, fintech, cloud infrastructure, and digital public platform are now the backbone of modern economies. Gauteng is uniquely positioned to lead in this space, and we must leverage this advantage to build globally competitive digital industries. The third, Africa remains resource-rich but value chain poor. We export raw materials and import finished goods. We are connected to global markets, yet insufficiently integrated within our own continent. The African continental free trade area gives us a platform to change this, to build regional value chains, expand inter-Africa trade, and industrialize at scale. Its success depends on improved cross-border infrastructure, reduced trade barriers, aligned standards, and strong support for African businesses. Through platforms such as this conference, Gauteng is positioning itself as a continental execution hub, a place where the African Continental Free Trade Area moves from agreement to implementation. The fourth one, industrial growth must not be exclusionary. It must unlock opportunities for young people, township economies, and small and emerging enterprises, ensuring that growth translates into shared prosperity. Equally, industrialization does not happen without investments. Investments must translate into production. Production must translate into jobs, and jobs must translate into improved livelihoods. This is why the Gauteng Investment Conference has evolved beyond a traditional form. It is becoming a full investment life cycle mechanism for deal origination and project preparation, to financing, implementation, and delivery. Government's responsibility in this process is very clear: to de-risk investments through policy certainty, regulatory efficiency, and coordination across all spheres of government. To crowd in private capital alongside development finance institutions and commercial lenders, and also to ensure delivery, accountability, and project tracking. Credibility is built not on what we announce, but on what we deliver. And government cannot do this alone. We need a strong partnership with businesses that invest in skills, support localization, integrate small enterprises into value chains, and commit to long-term resilience. I'm happy, Premier, that you announced earlier, you emphasized this issue of skills and skills development. Very important to ensure that we get our youth into the economy. Ladies and gentlemen, Gauteng is a region where investors can find both returns and resilience. It offers a vibrant workforce, a commitment to enterprise development, and world-class infrastructure. Investment here is not a risky endeavor. It is a collaborative one where each rand invested multiply opportunity, strengthen communities, and build secure futures. Program Director, as I conclude, let me issue a clear call to action. Firstly, to investors, South Africa and Gauteng in particular is open for business and open for partnership. Africa is not a risky story. It is a long-term growth and return story. To business, you are not passive participants. You are core architects of our industrial future. Work with us to build industries and to develop skills. To government and all spheres of government, we must act with agency, coordination and accountability, removing barriers and accelerating delivery. We must ensure the ease of doing business so investors can come in and invest and we can deliver. And to Africa, our continent, this is our moment, not to extract, not to import, but to produce, to innovate, and to lead. Let this conference mark a turning point from commitments to implementation towards integrated growth that is inclusive and sustainable. And as you said, Premier Eli, in Gauteng, let us work together. Let us work together to build this beautiful province, to build this province that is the heart and the engine of the South African economy. I would like to thank you very much for this opportunity. Ke a leboga. Inkomo.
Lerato. Thank you for reminding us that investment is indeed the outcome of a negotiated risk, but more than anything, the outcome of negotiated risk perception. And that the risk and the story that we tell in South Africa is that this is a long-term growth and return story and not a story of the outcome of risk. Thank you very much, Your Excellency. Ladies and gentlemen, we are now ready for our first panel of the day, and this links quite tightly to the infrastructure insights and nuances that we've heard throughout the morning today. The title of this panel is Infrastructure Investment and Project Preparation, and I'm absolutely pleased to welcome the moderator, Sam Rowland. Sam is with The Economist, and in particular is the Sub-Saharan Africa Director for the Economist Intelligence Corporate Network. Let's give Sam a round of applause as he comes up. And his panel that he will settle into conversation with us standing by, we're joined by Madame Mametse Masimula, who's the head of Infrastructure South Africa, Advocate Michelle Phillips, who is the Group CEO at Transnet, the Director of Project Preparation at Afri-Exim Bank, Mr. Zito Alfayo. Paul Zimiri is here with us as well from the African Development Bank, and Madame Zen Dlamini from Standard Bank, where she sits as the Global Head for Infrastructure, Sovereign and Public Sector at CIB. I am aware that His Excellency might be departing soon. And so, ladies and gentlemen, if we do see His Excellency leaving, we do want to acknowledge and thank you, sir, for your time with us and that you've taken the time to come and really anchor the conversation. With that, Sam, might I hand over to you?
Is this on? Do I need to go to... Can everyone hear me? All right, thank you, and good morning, everyone, and thank you for hosting me back for the second time at the Gauteng Investment Conference. My name is Sam Roland. I'm with the Economist Group, and it is great to be back for a second year in a row. It's not every day I get to speak after a deputy president, so I thank you, conference organizers, for arranging this, and thank you for the scene-setting delegates. When I first was invited by the program organizers to speak at the Gauteng Investment Conference, it was early in the year, and we'd just come out of a fantastic first 2 months of the year. We've had seen Rand's strength, we'd seen a level of optimism that I hadn't seen covering the South African economy in at least a decade. We came out of a fantastic, phenomenal budget, and we'd all sort of said we'd finally turned the corner after a number of tough years, and this was now the perfect springboard to leverage off our next stage of growth. Of course, we know the end of February happened, the war in the Middle East broke out, and suddenly our story changed. Now, after a couple of hours of panicking, I then sort of started to think, and within the context of what we want to discuss today, I thought this is actually the perfect platform to have this happen, because this is going to allow us to hone our thinking, to refine our thinking, and to have the conversations that allow us to ultimately collaborate and think about things like reform and efficiency that will ultimately drive investment in this province going forward. So with that, I'd like to welcome up my panel, which of course is Ms. Mametse Masemola, the Head of Infrastructure South Africa, Advocate Michelle Phillips, the Group CEO of Transnet, Zito Alfayo, the Director and Global Head of Project Preparation at Afri-Exim Bank, Paul Zimiri, the Chief Portfolio Management Officer at the African Development Bank, and Zen Dlamini, the Executive Head for Sovereign and Public Sector at Standard Bank. CIB, if we can give them just another round of applause, please. And please, I'm going to sit on the end covered by the lectern so you don't see me sweat, but please take a seat next to me. Hi, Michelle. How are you? Colleagues, thank you very much for joining us this morning. I'm extremely excited to discuss our first plenary session, which of course is infrastructure investment and project preparation. The aim of what we'd like to get out of here today is how strategic investment, infrastructure investment can accelerate industrialization, improve competitiveness, and crowd in private capital, focusing on building credible, bankable project pipelines, aligning public and private finance, and unlocking large-scale infrastructure delivery as a catalyst for productive and inclusive economic growth. When I spoke to you this morning, I said this is a discussion between all of us. I don't want this to be a Q&A session, so don't wait for me to pick on you. Please do join and whenever you feel like coming into the discussion. I'm going to start off with Ms. Mametse Masemola on the topic of municipal infrastructure. And I mentioned when I started the idea of reform and efficiency, because I think those are two topics that have come together in 2026 very strongly. Reform, we know, is a topic that we've been discussing for a number of years. And as we entered into the end of February and how the global economy shifted, efficiency is going to become a key element. So I would like to get your thoughts firstly as Head of Infrastructure South Africa. And here, how can ISA, or Infrastructure South Africa, and banks, of course, help municipalities in the province package things like localized water and grid upgrades as ring-fenced as investable assets over our traditional municipal liabilities and ultimately use this as a way to crowd in private capital? What are your thoughts on that?
Thank you very much, Sam. So let me start off by saying that, just explaining what Infrastructure South Africa does. So we were established in September of 2020 to address two critical constraints in the infrastructure value chain. The first one is on weak preparation of projects that result in 80% of projects that have been announced not reaching financial close. And if they cannot reach financial close, you can get into procurement, you can go into construction of the infrastructure asset itself. And secondly, we were established to address the fragmented and slow pace of project delivery, particularly in the public sector. So our mandate is responding to those critical challenges. The first one is on deploying our 600 million rand project preparation facility to help with preparing and packaging these projects so that they are sufficiently de-risked. They can attract private capital. They can also unlock additional fiscal allocation from, say, from the likes of National Treasury and others. And secondly, we play a very central role around institutional coordination. So if I listen to MEC Maile in the morning and Premier Lusufi, really talking about this point on institutional coordination, because it's key to delivery of infrastructure projects, which takes place in a local government environment. So no project is implemented up in the, in space, but there are projects that can be implemented in space. So that's quite an important one. Now, coming to the municipality, we also deal with issues around regulatory unblockings, doing away with red tape, streamlining approval processes, getting these permits and licenses and exemptions in place so that you can fast-track the implementation of these projects. Now, coming to the municipal environment, we're very clear, and this is what we see in the last 4 years, that the lack of municipal bulk infrastructure is a binding constraint on the economy.
Absolutely.
We have not seen that the rapid growth of building manufacturing facilities, enabling mixed-use land development and so on, because of lack of municipal bulk infrastructure. We had a conversation with the senior officials of the city of Ekurhuleni, for example, and they were saying that in terms of the planned and approved developments, just in the city of Ekurhuleni alone, they will need roughly 86 billion rand.
Yeah.
Of capital to actually roll out water systems, electricity distribution systems, waste management, and internal roads, and so on. And so, for as long as there's that shortfall of funding, we will not be able to see these top structures being built as part of driving economic growth, creating jobs, etc. So we've got to, our view as Infrastructure South Africa is that we're going to have to turn these so-called liabilities of municipalities into assets that must be investable and at scale to bring in and mobilize private sector capacity from a financing perspective as well as an implementation perspective. Just to give you a couple of examples of the work that we're doing in municipalities in Gauteng. So we've now finalized the Mayor of City of Tshwane, we've now finalized the phase 2, the preparation work of phase 2 of Rooiwal wastewater treatment plant. We are working with the Water Partnership Office. That project is now going to be a most traditional format of a PPP. So which means that we allow the private sector to come in to augment the fiscal or the fiscal allocations that the municipality of Tshwane or the city of Tshwane will have to support that particular project. There is a 19.4 billion rand wastewater treatment works program that we are supporting for city of Ekurhuleni through ERVAT, which is their state agency for the municipality. That's the work we're preparing and packaging currently. And obviously, you know, it will promote, I mean, it will get to a point where these projects are well prepared and packaged. They can be able to leverage private sector financing, plus unlock additional fiscal allocation from the fiscus, essentially. and others. So we are building on this work to ensure that these assets of municipalities can become attractive. They can be sufficiently de-risked, they can be attractive, and attract private sector capital to augment and complement the balance sheets of these municipalities. So it's quite an important area for Infrastructure South Africa at the moment.
If I could just put that as a follow-up question, I mean, the experiences are fantastic to hear, and what are the sort of key success factors that you've taken away from this that will be used to drive the next phase of investment-led growth through ISA? Sorry, please then go ahead. Yeah.
Yeah, actually, I just want to comment before he move on to the next question for Mametse.
Can everyone hear? Not so much, all right?
Am I not audible?
I'm not sure. I'll tell you what, let's here we've got a microphone coming up. Apologies for that.
Hi, can you hear me?
Much better.
Thank you so much. I just want to make this comment. You know, I don't think that we acknowledge how systemic the municipalities are in the metros. I have a pair of line that I use even when I go to board, and I have conversations with the likes of SIM, and I will say we have a joint responsibility to deliver this economy. It's not up to government, it's not up to just private sector, including the communities. So as soon as we understand the importance of municipalities, the impact that municipalities have got, if Joburg City is not operational, things dysfunction, you can see the impact there. And I had the outgoing MEC say that Joburg is key, Joburg is, it's the biggest city.
Yeah.
Now, it just feels like we wait for things to get to the edge of the cliff before we act. You know, we can't wait for that. We just do not have that kind of luxury. The municipalities, we've been seeing the downward spiral over time, but the focus has been on Eskom, the focus has been on Transnet, the focus has been on even SAA at some point. But the municipalities were actually on a back foot. And now there is a critical focus because we're talking water here, we're talking sanitation, we're talking electricity. Just the amount of debt that is owed to Eskom by municipalities. Just the amount of debt that is owed to the water boards by municipalities. It's the snowball impact. And work has to happen because it's not just about funding. It's about how we capacitate the municipalities. It's a joint responsibility to make sure that we capacitate the municipalities. We are having conversations with private sector, the likes of Vodacom, AECI. So the focus should be directed to municipalities with the same energy and the excitement that we actually boasted when we were supporting Eskom. Thank you.
Absolutely, yeah. Go ahead, Paul. Sorry.
Thank you, Sam.
Theon, go ahead.
Yeah.
I think you're good.
Okay, thanks. Sam, I think for the African Development Bank, you asked the question of what role can the banks play? And we feel that I think the vision expressed by the national leadership, by the deputy president leadership at provincial level, we think how we can come in, crowding in other players is one, on our own, we have a project preparation facility which can be used by municipal authorities to prepare the projects, right? We house, even here in our office in Centurion, the Africa Legal Support Facility. What that does is to bring in legal brains to help government at different levels in terms of negotiating, structuring deals. So it's not just the legal that they bring a little bit of technical support as well as financial support. These are facilities available to municipal authorities and other would be borrowers at national level in the country. As the African Development Bank, we work with partners. There are a lot of municipal authorities. It's easier to go to the metros and be able to lend directly. But we work with our colleagues right here in the Republic, the DBSA, IDC, commercial banks, either lending directly to them or providing some partial guarantees that will help reduce the risk profile and therefore improve the interest rate that the municipal authorities can get the borrowings at. Thank you.
Just quickly talking about sort of collaborations and crowding in private capital, I'm just going to take a detour, but Zito, I want to hear your thoughts on scale of crowding in private capital. I mean, we've understood the challenges that we face, and you know, the amount of money that has been mentioned around filling backlogs in infrastructure investment is known, and so it becomes a scale question, right? How do you think about when you think about crowding in private capital at scale?
No, thank you for that, Sam, and thank you to the organizers for having Afreximbank at this particular panel. Before I answer that question, Sam, I would like to paint a picture of what we see in the macroeconomic environment, because this is very important, and it puts into context this word bankability. So currently what we witness is that, first and foremost, we're in a very competitive environment. Gauteng is competing with global cities to attract investments. So Gauteng is not operating in isolation. The second thing I would like to note is that interest rates are going up, meaning the cost of capital is going up. And the third thing to note is that government is also operating within a limited fiscal space. So for you to get to bankability, what that means is that Gauteng and South Africa in general has to rise above looking at South Africa as a market, which is what has been the case traditionally. We at Afreximbank are primarily geared towards promoting intra-African trade. And when you look at intra-African trade, we're looking at Africa as a continent. We're looking at Africa with a population of about 1.3 billion people and a GDP of about 3.4 trillion. Now, when you look at developing projects and de-risking them at that scale, then you realize that there's an opportunity, an immense opportunity that Gauteng has to step up and bridge that gap. Gauteng has a lot of positives. Unlike most other cities across the continent, there's already momentum, there's already infrastructure, and there are already industries that are operating. 19% of the intra-African trade emanates from South Africa. Gauteng contributes 40% of the GDP, of the industrial growth of South Africa. So what we see is an opportunity for Gauteng to look at its private sector, see how best you can collaborate, leverage off its comparative advantage on the agricultural space, on the industrial space, so that they can be more competitive. Let me give you some examples. Currently, the continent imports about $60 to $80 billion of foodstuff. We all know these are some of the comparative advantages that Gauteng possesses. The continent imports about $50 to $60 billion of fertilizer and chemicals. These are sectors that Gauteng already has a competitive advantage. What is missing is information. So typically, what you've seen traditionally in project preparation is that people typically prepare project preparation or de-risk projects looking at a small market. What that does is that most projects may not get to bankability because the returns are low. When you look further afield and you look at bigger markets, you realize that you can actually get higher margins, still be competitive on the continent, and get to bankability. I'll give you an example of what we've done. I'm sure you've all heard of Arise integrated industrial platforms. This is arguably the continent's leading industrial developer across the continent. Afreximbank has invested $2 billion. So we're moving from aspiration to action. Committed $2 billion in form of equity and debt. Through Arise, we are supporting 12 countries across the continent to develop industrial parks. It will be easy for us to replicate that in South Africa, in Gauteng, to bring this expertise to partner with local investors so that we can scale up that investment and link these markets together. So those are some of the interventions we're looking at. Afreximbank also has a program, what we call the Intra-African Trade Champion Solution. So typically what you realize is that, and this happens in other international countries, you realize that the Chinese, the Europeans, and the Asians have got their industrial champions that they bring into the continent and participate competitively in projects that are basically for Africans. We at Afreximbank have a solution where we partner with our local champions, take them to government, and provide funding. So when they participate in tenders and government procurement processes, they have back-to-back funding. It's not just an EPC solution, it's an EPC plus F solution. And we're advocating for that so that African indigenous investors have a chance to compete, to participate in some of these projects, be it on logistics, be it on transport or energy. So these are some of the things that we're looking at, and we encourage investors to now look further afield and note that opportunities are, Africa is awash with a lot of opportunities. All we need to do is connect the dots. We at Afreximbank have that information, we have that data, and we're happy to link these industrialists with these markets so that we can get to bankability at scale, which is very important. Thank you.
Agree, and let's maybe turn our attention to linkages. And obviously the Premier mentioned expanding rail and high-speed rail into places like Limpopo and KZN. And the Deputy President mentioned the multiplier impact. In my previous life as a government employee, I eat, slept, and dreamt the multiplier, so it excited me a lot to hear him talk about that. But I want to talk to Advocate Phillips on this. And when we think about high-speed rail, when we think about the multipliers, what comes to mind for me is connectivity. And we know that we still have a number of steps to go to sort of reach ideal optimal connectivity, and this is in terms of the movement of people, this is the movement from the sort of pit to port, if you will. I wanted to sort of hear your thoughts on where we are in terms of Transnet's recovery plan. We know we've spoken about the vertical separation of Transnet Freight Rail, which has tremendous opportunity to sort of drive multiplier-led growth. What are your thoughts on that when you think about how the provincial government and private developers can collaborate to ensure that these inland logistics hubs can take advantage of the connectivity that is driven by high-speed rail and the network industries that you are so intimately involved in?
Thank you very much for the question. Good morning, everyone. Firstly, let me say I am now resident in Gauteng.
Welcome.
Transnet head office is in Gauteng. And the province is very important to us, like you say, in terms of connectivity. You can mine all over, but if you can't get that out of the country, if you can't get it to the right places, you're not going to be making any money.
I suppose if you can't refine and beneficiate.
No, you have to. You have to do all of those things. Transnet does not make money if it does not move commodity. So we have to ensure that we have a network that is of the right standard to enable the movement of the commodities, and we are very rich in commodities in the country and in the continent. So the regional connections are very important, but also the connections between the various provinces, getting it in and out of the country. The Transnet Recovery Plan at start sought to stabilize the business. In 2022-23, we were on a downward trajectory. We were moving 149 million tons on rail from a high of 226 million tons 5 years earlier. The recovery plan has enabled us to arrest the 5-year decline. And we're very pleased to say that we are out of the 140s, we are out of the 150s, we are on the high 160s now, and we are moving towards the 180 million tons. It's a very good story to tell. Now, how do we get there? The people sitting around me here are the people whose doors we've been knocking on and who have come to the party as well to support. I think everybody knows that Transnet itself, yes, a state-owned entity, but we do not get funding from the state. We have to apply for that funding. We've been fortunate in the last year to have applied through the budget facility for infrastructure. We made 4 applications. We were successful in 3 out of the 4. And it was not very easy. I think that there is still some work that we could do to probably make the application process a little bit more, let's say, user-friendly. However, we made those applications and we received about 12 billion that will allow us to make some investment in the network. For Gauteng specifically, Durban to Gauteng corridor, very important because we need to move everything or most of what is on road at the moment onto rail, because this is the hub, right? We will be making further applications to the tune of about 7 billion that we have to invest in that corridor over the next 5 years. Central corridor, very important for Gauteng as well, because it basically is the connection to just about everything, different provinces as well as the region. Probably more than 4 billion that we will be applying for as well to invest in the corridor. In total for Gauteng, Transit will be investing over the next 5 years about 34 billion rand. Now, I know what is close to your heart, Premier, very important. We, from the pipeline, because we run the pipeline from Durban to Gauteng as well, Transnet Pipelines, we have a motto in that business. We say we keep Gauteng wet. Now, what that means, if you do not have diesel and petrol in your tanks, nothing moves in this province, right? If we do not move jet fuel to our Tambo, nothing will move. It's the busiest airport in the country, right? So one of the big projects, and by early 2029, we would want to be complete with it, is the building of what we call Pipeline 6. It is the pipeline from our Jameson Park facility in Heidelberg to our Tambo. If we don't build that, and it's important that we understand the speed of execution here. If we don't build that, we will run out of capacity to feed our Tambo. So we've got 1.3 billion that we want to spend. We are in the market now for contractor to do that build, because by early 29, we need that pipeline constructed and working so that we can feed our Tambo. The facilities that we have for jet fuel that we manufacture in the country at Sasolburg will not be able to meet that demand. So all of those projects are very important projects. Do I have the money? No. This is why all of these people are important.
This is why we are here, of course.
So thank you very much for putting me amongst the bankers. I go to them often with a begging bowl, and I have to say they have been very supportive. At the same time, the people in the audience that are private sector, we are told that you have the money. We need you to put that money on the table, because without private sector participation, none of these investments or none of this construction is going to be possible. It's of utmost importance that the private sector participate and participate meaningfully in what we need to do to grow South Africa.
Just to...
Thank you very much, Zain. It's been very helpful.
Thanks, Mish. Just to enhance on His Excellency.
You've obviously left a bombshell for him to
I hope that's not an indication of me
office.
chasing them out of the room.
Just to augment, you know, for me, Michelle has played quite a critical role. Like she's done exceptionally well. When you talk about the container corridor, you know, which is the one from Durban to Joburg, we've seen so much interest from private sector, to Michelle's point, which does not necessarily place a burden to government. And that's really what infrastructure investment is about. You've got the likes of Costco's, like the likes of your DP Worlds, and other key entities that are really interested in investing. And then you also have the mining sector that's doing quite a great job. But to your point, the reliance is not necessarily just on balance sheet or from the banks or just investors, but you're also looking at private sector participation, as can be evidenced by the ICTSI story at Durban Container Pier 2 Terminal. Thanks.
Zain, I want to ask you about speed of execution that Michelle mentioned as a critical success factor in ensuring that investment-led growth is leveraged to have a far greater impact than just the numbers on the page. And Paul and Zito, this is also for you guys. When you think about speed of execution, and Zito, you mentioned the sort of risky world we find ourselves in, speed of execution is going to become a critical success factor in ensuring that these projects are turned around quicker and reach close and reach productive capacity quicker. You know, perhaps for the three of you, what do you think about when you think about speed of execution, not just from project preparation, but access to capital, availability of blended finance and bringing blended finance products to the market?
Okay, I'll allow the gentleman to go first.
Okay. Thank you for that, Sam. It's a challenge to speak to speed of execution without speaking to project preparation.
Can't hear. AV guys, please.
It's a challenge we should speak to.
Go first.
I was saying that it's a challenge to speak to speed of execution without project preparation. And why I say that is because if you prepare a project well, then you can get the financiers on board in a timely manner, on the debt side and on the equity side, okay? Because how you structure and package it can address so many risks that can ensure that first and foremost you get the right and appropriate equity investors on board. You preempt all the questions that are likely to be asked during the investment or credit committee stage, and then you ensure that you can crowd in appropriate type of risk instruments, okay? Now, if you rush the process, okay, and you prepare a business plan that's fit for purpose, let me call it fit for purpose, and present it to a financial institution. Now, depending on the scale of that particular project, if it's a huge project, typically like what we see from Transnet, it means that there's going to be a syndication. If the thought process has not been put in place to align the terms and conditions under which the investment is to take place, you've not identified the right OEMs or ECA providers that are supposed to come on board, if there's not been a lot of foresight and thinking, what happens is that those projects tend to stall. The structure collapses, and then it takes even longer to crowd in that funding that you seek. So what I tell my clients in both the public and the private sector is that, similar to building a house, the foundation you lay determines the quality of asset that you put in place and how long it will be sustainable for. I would rather a developer spends 5 or 6 extra months developing a project well. They will actually end up saving 3-4 years in the development and its implementation.
3 to 4 years.
Yes,
fantastic.
Depending on how you structure and package it. And the likelihood of it being an NPL reduces significantly.
NPL being non-performing loans.
This is provisioning when the project does not get to, when the project is not in a position to repay its senior debt obligations or meet the equity returns that investors had in mind.
Correct.
So I see project preparation as an investment in time and resources to unlock investment and bring projects to the market in a timely manner.
I think also, I mean, to the point that he's making around project preparation, obviously we know that it's very complex, it's time consuming, it is also high risk because we don't know if this project is going to be viable, is going to be bankable. But the preparatory work and the heavy lifting is what will ensure the speed of execution, from getting projects to commercial close, getting these projects to financial close. From our side as Infrastructure South Africa, when we are onboarding the project, so it forms part of the Infrastructure South Africa pipeline, we already have in those governance committees or in those governance committees, we already have domestic and international financing institutions so that they can have line of sight when these projects are going from stages of development, so that they can also provide, the lens and the framing of saying, is this project going to be fundable, or defining what those funding pathways will be for these projects, and if so, what will that funding pathway look like?
Yeah.
And we've also coordinating ourselves with other project preparation facilities, including African Bank, IDC, DBSA, Infrastructure Fund, and so on and so forth, because it's important that we all collaborate in pursuing and building momentum behind major infrastructure projects of government. The ones that Michelle is speaking to that went to BFI, Infrastructure South Africa has had a hand in preparing and packaging those projects, from Project Vuvuselela to the current one on the Conco corridor, the one from Johannesburg to Durban, and so on. It's very important that we do that. So we collaborate across government institutions to build momentum behind these major government projects, but also having financing institutions sitting with us so that government does not speak to itself. And you save time in getting these projects to financial close and commercial close, because they've had a hand and they have line of sight and they have a front row seat, essentially, in preparing and packaging those projects.
Yeah. Just to...
okay, after you.
Perhaps go ahead, Zen.
Okay, so project prep is very, very critical, and that's why we think about a project prep facility. I know that the FDB has done some great work there, which came out last year during the G20, P20. It was one of the recommendations that came from the financial and infrastructure work stream. But if you think about some of the projects that do not actually materialize, it's because of the project preparation process. We're looking for investable projects, and as banks will say, I will take this transaction because it meets all the criteria that is required. However, when you speak to investors outside, they will tell you about some of the things that need to happen to ease the environment for them to come in. The regulatory framework, for instance, sometimes the regulation can be an impediment, and there has to be that kind of transparency. And I think sometimes the yields as well, like the returns. So we have to find like a balance between the returns that we're looking for and the affordability, because there has to be a balance between that. So for me, outside of just some of the variables that my colleagues have touched on, I think that the regulatory environment is quite key, and this is the messaging that we've taken to with all the stakeholders, as well as some transparency, and then finding a balance. If you talk about the GCC, for instance, the yields that they look for would be quite big. So that will impact the execution on certain transactions.
Absolutely.
No, thank you. I like what my colleagues have said. Without repeating, I think the issue of readiness is very key. Do we have all the feasibility studies and everything required? For us, when we are saying what is readiness about, it's really me trying to appreciate from the time I get a letter from Michelle to the day when Transnet is able to draw down in the facility how much time has passed. This is how we look at readiness. If I were dealing with the Transnet, an ongoing relationship, ably managed, information is communicated on an ongoing basis, whatever we need is available on their website. It's a lot easier. And with the new president we have at the bank now, the push right now is we are improving our turnaround time. We are changing, we have changed really. For retained clients, we will not do some steps, we will cut them short to make sure that the time we take is shorter to get to financial close and therefore execution. What can clients who are new to the bank actually do? Communicating earlier. I think my colleague there, if you say Standard Bank, African Development Bank, who is faster, I will never be able to beat them, all right? As a development bank, the issues of environmental, social compliance are rigorous. So we have 81 different shareholders, as everybody probably knows. These are member states, from developed countries to all the African member states. We cannot cut corners to that. So when we have a project that is going to maybe move people from one place to another, a number of days must be allowed when you actually put out in the public that this is what is going to happen, to allow time for any complaints to be raised and communicated with the project. When we communicate earlier, it allows us to inform our clients that this is what you can do even before you formally approach us.
Sam, if I may, as someone who has now gone through these processes, quality is key. When we talk about don't rush it, you can work with speed, but you have to work with quality. You have to deliver a quality product. Both from, I think, from their side, that's what they require. So you must bring in those skills. If you don't have it, go and buy those skills so that you are able to make quality applications. That's the one. The other thing is that when we put things out to the market as a Transnet now, and we want private sector to make proposals or to bid, we also require quality bids.
Yeah.
We require quality bids because at the end of the day, when we give that business to somebody, we need to be assured that it's not going to be something that we have to rescue halfway down the line because we are already on the back foot. This entire rail network has to be rehabilitated. There's no time for experimenting or we have to get it right. So when we get proposals, and I can tell you, I get proposals from somebody every other day. Oftentimes, it is a 2-pager. I can't work with it. I can't work with it. And then I am reported for not supporting.
Yeah.
And we have to get it right. We have to do the work. We have to put in the time. We have to get in the skills so that we deliver quality business cases, quality pre-feasibilities and quality feasibilities, so that we are able then to take the money that I am borrowing and be able to invest it because the return is important.
Yeah, it's not a clean cut.
It's not clean cut. We have to get it right.
A private partnership is the only way. It needs to meet a serious amount of criteria. Paul, I just want to talk a little bit more about the financing element. And obviously, when we just think about the past 4 months and how quickly the world has changed and how risk appetites change with it. I mean, we've seen the oil price shoot through the roof, as well as many markets and emerging markets tanking as capital flowed out of those regions. This obviously must affect the attitudes towards blended finance. What are you thinking about when you think about blended finance 2026 and beyond? That's not, I don't like using the word future-proof because I think it's a silly term. I want to say future-ready. What are the blended finance, what are the finance instruments that are going to be critical to ensure that projects are sustainably rolled out across the work of people like Michelle and Mamitsu?
Thanks, Sam. So from 2021 to 2025, we have raised $645 million, which crowding in other funding were allowed for up to $2 billion funding through the blended financing structure. That was 44 different projects. And I'll give you an example very quickly of one of these. So we did a water project in East Africa. Most members would know that water sector is not very easy to get it, to make it bankable, and excite private institutions out there. So the way we did this was to say, as a PPP, everybody has a role to play. And what the authorities did was to allow for a longer than average concession period, 27 years. From the lenders, investors side, we had not only the usual senior loans, but also a junior loans, which would mean that beyond the risk-taking by the sponsors, this is money that is going to stand in line, if you like, second layer of loss-making, loss absorption, if things go sideways. And then we had viability gap funding in the form of a capital grant. This was really critical because without it, this was not going to be attractive now for the sponsors. It is the catalytic element that made the transaction bankable. So we think that blended financing is critical, one, in making marginally unbankable projects bankable and attracting enough investors for them to see that the risk they're taking is worth taking because the return will be made worthwhile. In this instance, all the lenders involved allowed a longer lending tenure. For us, standard is 15 years, but we gave this facility 18 years to allow a lower tariff to be enjoyed by the communities. This is water, and initial plain vanilla structure was resulting in a tariff which was significantly higher than would ordinarily be possible. But putting it the way we did with a longer concession, longer tenures, a bit of equity, junior equity, and the grant reduced the tariff by 29%. So we think that blended financing is really important in especially our frontier markets. For South Africa, for instance, it's a bit different. This is a middle-income country. You talked about going forward. From now, what we are seeing is that blended financing on the continent has been more evident and more successful, one, especially in the energy space, where we are using newer technologies, clean energy. Some of the technologies such as CSPs, concentrated solar projects. The technology is relatively new, it's quite expensive, and when you want the tariff to be just on the basis of normal standard structures, it is quite not very affordable by the communities. So bringing in some grant funding, bringing in concessional funding helps to reduce that cost and therefore reduce the weighted average cost of funding and making it more viable. We have more funds now. We have different pockets in terms of the concessional funding that can be used. We have what we call SAFER. This is a fund that is really good, specifically at the energy sector. Energy for us has been one of the key areas where the demand is high by different countries, because obviously there has been a challenge in terms of getting energy into homes. And climate adaptation and mitigation is an area that has been relatively underfunded. So it is an area where we are trying to encourage that funding, that compliance, by bringing in those concessional funds to help motivate players to get into that space and do funding that.
I agree, and I think it talks to efficient capital allocation being more critical than ever. Zen, do you agree with that?
Yeah, actually, Sam, I've just been pondering about what is happening currently in the world. You know, like the current war, not necessarily just a temporary disruption. It's actually a reflection of the rise of multipolarity. Correct. You know, the era of the unipolarity is gone, and it means that Africa, you have an opportunity to show up. Africa is almost like a battleground for a global capital competition. I just think about some of the projects that we've seen, the Lobito corridor itself, and now the mega airports in Addis. And if you think about what Africa is seen as well, a buffer zone for geopolitics, you know, and it's almost like a safety. And Africa also provides very much critical resources. We've got critical minerals, you know, like just think about DRC, a continent that is quite wealthy. Now, we just need to make sure that we do not align with any other pool of capital, but We deal with all the pools of capital. We're quite close to the US, we're quite close to Asia, the Eurozone, and now the emerging GCC, which has got like huge appetite for Africa. So we do not align to any force, but we support all of them, but also we become economically strategic.
Absolutely, and I think multipolarity is certainly complicating the state of the deployment of capital. It's no longer always necessarily the idea of project attractiveness, but often the relationships that a country holds. But I see the clock ticking inexorably towards zero, and I would love to talk about so many more things today. But I want to just quickly touch on special economic zones. Mamitse, this one is for you. The Premier mentioned the sort of emphasis on special economic zones as catalysts to growth, and we know the various that exist. And we were sitting here last year talking about the automotive city in northern Pretoria. What do you think about when you think about the role SEZs need to play? And what you spoke about earlier almost feels like SEZs and the priorities placed in there, their success can be amplified by the success that local government municipalities can have in creating and connecting to those SEZs. Would you agree with that idea?
Absolutely, Sam. So we've looked at the growth performance indicators for the Gauteng city region, and we know that the manufacturing is declining. In the last 10 to 12 years, it's been steadily declining in Gauteng, primarily because of the need to invest in connectivity infrastructure to support the manufacturing facilities in Gauteng. And one of the ways of amplifying that and accelerating, the building of manufacturing capability that plays to Gauteng's comparative and competitive advantage is to secure and focus on the special economic zones. OR Tambo SEZ is one, the Tshwane Automotive SEZ is one, the Val SEZ, as the Premier Lucif was speaking to it, as well, is about to be proclaimed, etc. Our work from Infrastructure South Africa side is working with the SEZs on the preparation for the bulk element, because ultimately, again, if you don't have the water systems, you don't have the ability to manage waste. If you can't bring in electricity distribution infrastructure in there, you can't deploy broadband networks and so on. It renders those special economic zones not profitable, not attractive for the private sector to actually install manufacturing facilities in those areas. And so that's very much a big focus of Infrastructure South Africa's pipeline, or what we call an emerging pipeline, or the projects that we're currently preparing and packaging, and hopefully over a period of time, we'll be able to unlock the necessary funding and financing for those special economic zones, and we can see a much more accelerated manufacturing activity happening in those special economic zones.
And it can no longer be siloed, right? We can no longer think of manufacturing in separate industries. We're now blurring the lines closer and closer, and requiring the digitization journey to follow as quickly and as rapidly as the bulk infrastructure. And then I'm going to close off after that.
I just wanted to speak to the area of special economic zones and give an example of a project that we at Afreximbank have financed here in South Africa. This is the Nyanza Light Metals project. When this project was conceived about 4 or 5 years ago, one of the key things that we had to consider was where to locate the project. Okay, this is a project that we're going to close this year, and it's going to be Africa's first fully integrated titanium plant. And when we looked at the costs in terms of power, transport and logistics and utilities, it was clear that the best place to locate this particular project was in the Richard Bay industrial development zone. Why? Because this particular area, first and foremost, had all the logistics that were required. So that saved the project quite a bit in terms of investment costs that they'll have had to incur if they were operating outside the industrial development zone, one. Secondly, we had credible counterparties that were able to supply the power, the transport and logistics. So that reduced the cost and enhanced the bankability of that particular project. What I would like to highlight is that these industrial development zones are actually Africa's untapped superpower. We no longer have to develop infrastructure across a whole country. If we can demarcate certain areas that have certain strategic advantages and invest in them and put everything in place so that we have a plug-and-play position where investors can set up shop, then I think we have a high chance of industrializing this continent in a very timely manner, especially when you consider the geographical footprint and the size of this continent. The second thing I would like to highlight before I hand over back to Sam is that in February 2026, there was a significant development that occurred in South Africa. South Africa became a member of Afreximbank. This is of particular importance to the participants in this session and those even outside, because what that means is that South Africa has an opportunity to tap into Afreximbank's country program where we have earmarked $8 billion available for investors in the public and private sector to tap into. Currently, we have a pipeline of $6 billion that's currently under review, and we'd like to reach out and bring this to the attention of investors that we're open for business, and we're happy to engage with you, whether you require funding on project preparation, project finance, export development, guarantees, syndications, equity investment. We're more than happy to consider that because Afreximbank is your bank, and we're keen to work alongside our partners here, be it IDC, Standard Bank, AFDB, because Afreximbank on its own cannot close out these infrastructure gaps. So we're keen to collaborate across the full value chain to ensure that we can de-risk the continent, de-risk South Africa, and get it to bankability and enhance its productivity in a timely manner. Thank you.
I see we have a few minutes left. Thank you, Zito, for that. What's been interesting for me is, and I've really appreciated, is the appreciation, understanding of the challenges that as any emerging market would face, and where solutions lie, not just to sort of bring infrastructure, whatever it might be, up to speed, up to sort of sustainable levels, but actually grow for a future that will benefit the province as a whole. Any last thoughts, colleagues, before we close off? Michelle, I see you would like to say, if I can ask, we just keep it very brief.
Thank you. Maybe 1 minute. I have to take the opportunity because we have business in the room and the private sector and everybody. So allow me. You know that we are working quite fast to implement the reforms. By April of this year, we are hoping to announce the new private train operating companies who will now be introduced onto the Transnet network. It's history making. It's the first time that we've done this since our existence, so it's very good that we've got private operators who will be able to also move commodities on the rail network. That's the one. Number two, container corridor or Durban to Gauteng corridor. We will be putting that to market for a concession, 25 years concession to the private sector. Again, we need them to participate meaningfully by Q3 of this financial year. We need that out in the market. So it's very important. And then also the infrastructure manager, you know, the split of infrastructure manager and operating company. Infrastructure manager will be putting out for Gauteng specifically. We have 36 sidings that will require operators. So we would need them to, again, when this goes to the market, to participate. And I'm sure the funders would be waiting ready for whomever wants to come and engage them for funding to be able to do this work. Thank you.
Colleagues, thank you very much. I see our time is unfortunately at an end, and as I could talk about this for hours, but I realize that there are other people itching to also speak on a number of other important topics. So if we could give the fantastic panel a round of applause. Thank you. Make your way up. And this brings us to back to my colleague Nozipho Shabalala, who is going to introduce our next session, which of course is the high-impact dialogue, the importance of investment on the continent and the role of diplomatic leadership in implementing the AFCFTA. So thank you, everyone. I look forward to engaging with you later, and on to my colleague Nozipho. Thank you.
Thank you so much. Ladies and gentlemen, if we just take a moment to pause and reflect what we've just witnessed in terms of that conversation, it is testament to the fact that when we talk about pledges to projects, the detail on projects that are in the pipeline, the criteria that we need to be thinking about as we think about project preparation to significantly build that pipeline, all of that clarity, all of that depth was in that conversation. Can I ask for one more round of applause for Sam and his panelists? I'd like just to share a little bit about what happens next. We are still in plenary up until lunchtime. There are 2 items that are on our agenda that I'd like to bring your visibility to. The first of these is that, yes, we are anticipating and planning to have a high-impact dialogue with Minister Parkstar, where we're really going to be focusing on the African Continental Free Trade Area. We're going to be focusing on the industrialization strategy as well as general competitiveness issues that sit within his portfolio. And then finally, ladies and gentlemen, one of the things we've heard quite a lot about today is the opportunity that sits in new industries that are emerging as a result of emergent technologies, specifically AI. And so one of my sisters, Zinati from CNBC Africa, is going to be moderating that conversation before we break for lunch. Right now, though, I do want to just talk to you a little bit about what happens after lunch. I'll make these announcements again just before we break. We're going to take a lunch break for a good solid hour before we then go into our different round tables. These are action round tables, so emphasis on the word action. And what we want to do in these spaces is to create a smaller room that allows us to go a little bit deeper in some of the issues, to move from the surface level theoretical engagements and really sit in the granular with you. The emphasis, of course, here is on the word action. And so what we're also looking for is that out of these action roundtables, which will run parallel, there will be an opportunity or a consolidation of what is the singular action that the group has come out with. So each of those moderators, you'll hear them really pushing you towards an action-orientated outcome. When we say that we're not in the business of conferencing, we're in the business of doing real work, the business of consequential conversations, this is what we mean. For now, though, I'm going to invite you to turn your attention to the screen. We have some audiovisual examples of pledges that were made in the preceding years and how they've evolved and where they are now. First up, let's take a look at Stain City, if I can, please. We're going to play that video, and I'll be with you very shortly.
City is a legacy development that was initially envisioned by our founder, Dave Steyn. So he decided to make a legacy investment, and he chose Gauteng, in fact, as the place to do that. And Gauteng is obviously the economic hub for South Africa. So Dave saw the opportunity here, one, that there was land that he'd be able to create this masterpiece in. And secondly, it's where business happens. We also believe that we're creating a world-class luxury lifestyle estate. And we know that we're winning in this space because we have been ranked as one of only 2 in South Africa as part of the top 10 in the world.
Gauteng remains the hub, the commercial and private, the commercial and business hub within South Africa, and very much so within Africa. if you really want to be in the middle of where all the deals are taking place, you need to be situated in Gauteng. The largest number of dollar-based millionaires on the African continent is still located in Johannesburg. I think the latest count was something like more than 12,500 dollar-based millionaires rather. The second city to that is not in South Africa. I think it's in Egypt, if I'm not mistaken. So when it comes to commercial activity, when it comes to doing business, when it comes to putting together deals and where there's a hive of activity, it is still Johannesburg within Gauteng, and Gauteng within, as a province within the Greater South Africa.
Initially started with bulk service contributions. Most developers would do that when they kick off a new development. And we did that very successfully with government in this space. So we invested a lot in stormwater, in sewage, in electrification, and very importantly in roads. So we had an incredibly successful partnership with the provincial government to establish larger roads into the area. So the old William Nicol was completely transformed. It's now the Winnie Mandela Road. And it doesn't only link up to our gates, which it initially did, but it's a beautiful dual carriage highway essentially through to the N14, which really then connects us now through to Centurion. And I think that's been a massive impact, positive impact for the area. We estimate that so far we've probably created about 30,000 jobs. And on a sustainable basis, probably close to 3,000 jobs have been created. That means that there are ongoing jobs. So, when you're starting off a massive project like this, there are always going to be challenges, and one expects that, but I guess it's how one resolves those challenges that's really important. And I must say that my experience has been that the leadership in the Gauteng province are very attuned to the need to get involved and to find solutions collectively. This is a very long-term development. There's probably still another 15 to 20 years of development lying ahead of us. Late last year, we launched a Stay City hotel, which is operated by our Saxon company, our sister company called the Saxon. We brought a Saxon spa to Stay City. We're enhancing retail opportunities. We're looking at bringing a jazz club before the end of the year. So there's just so much happening, and we're very, very excited around the opportunities.
Our industrial area, the areas around us is Tembisa, Clayville, and Ivory Park. So a lot of our employees come from this area, and from an economic development of the area, it's largely about youth. We believe if we localize our own infrastructure and localize our own manufacturing, it filters down to getting local supply chains such as local transport solution, local core suppliers, which can also probably be like a secondary layer of our supply chain, and we can get young people in the industry. Plastic, as you know, with EPR, navies and Polyco, there's a lot of work around recycling, reclaiming, and I think a lot of young people can get into that and being involved in the recycling, and we can be the beneficiaries of that and buying from them and getting the right reclaim and right recycled stuff which we can put back in the supply chain. And a lot of things in our industry is also about education, about educating the end user how to be responsible in terms of using plastic, how to do the right thing in packaging and littering and all of that. So that's the extended part from a community point of view, keeping our environment clean.
Key factors that influence our decision to invest in Gauteng is firstly the infrastructure, the access to talent as well, bulk infrastructure that's available, access to our customers, this relative proximity to our key customers being the large FMCG manufacturers, as well as access to our export market. The journey from pledge to implementation, we've strategically moved towards installing our manufacturing capacity. We've installed our extrusion cast polyprop line. We've installed our printing lines. We've also upgraded our bulk infrastructure with regards to electricity. We've employed a technical team that will be able to support the expansion, as well as done a lot of development as well to get us ready to go full steam ahead with our project. The support from the Gauteng government, and particularly the GGDA, has played a meaningful role in helping us move from commitment into execution. Looking ahead, we see a bigger opportunity to continue expanding and positioning Gauteng as a leading manufacturing hub for value-added packaging products in Africa. The policies that Gauteng government has, and obviously the access to GGDA, who helps us whenever we need intervention, navigating municipalities, bulk infrastructure, etc., has actually helped us to execute our project much more with speed, with lightning speed. This is only phase one of our project. As I said, we are looking at import replacement as it takes more traction. This is the proof of concept, the first investment that we made, and we're looking at quadrupling the investments that we made over the next 5 years. For investors considering investing in Gauteng, I would recommend that they look at obviously working jointly with the Gauteng government, the Department of Trade and Industry, which is in the close proximity, being just down the road here in Pretoria, working with the municipality, your local municipality where you're operating in. In our case, obviously we're operating in Ekurhuleni, and we're highly interactive with our business forums, the municipality in Ekurhuleni, and that will actually help you to speed up your project.
All right, ladies and gentlemen, I'm going to transition us to our second and final panel for the morning. Mindful that we are tracking a little bit behind on time and we'd like to catch up. I know that our speakers are standing by and our moderators standing by. So allow me to introduce Uzinati Kuma, business news anchor at CNBC Africa, to come up onto the stage. And maybe Zinati, let me ask you to hold as the ministers just walked in. So we're dancing on moving carpets in real time. Can I just ask for a shift in energy by a round of applause to welcome the minister as he comes in? Thank you. Good morning, Minister. Thank you very much. I know that you've crisscrossed traffic to be with us, and we appreciate your presence. You're just in time for a sit-down with me for a few minutes around the potential for the city region of Gauteng to be a driver of the African Continental Free Trade Agreement, amongst other issues. Ladies and gentlemen, straight after this high-impact dialogue with the Honourable Minister, Zinati will then be coming onto stage to come and give us the final panel of the day. We will then go to lunch. But before we go to lunch, I will be beaming up the action roundtables that we spoke about, so you know exactly where to go when you come back from lunch. Without further ado, Honourable Minister Tau, if I could please invite you, sir, to join me on stage. Minister, thank you so very much. You come at a time when a lot of the descriptions of what Gauteng represents for South Africa from an economic perspective and the continent have been covered. We've spoken about it as a heartbeat. We've called it an epicenter. We've said it is the center of economic gravity for the continent and for the country. What I'm interested in as we start this conversation is, what do you see as Gauteng's distinct competitive advantage that one should be a magnet to invest, but also should be a magnet to partners wishing to partner with the CESA region?
Well, thank you very much and good morning. Firstly, I should apologize. I was stuck in a meeting with NAFCOC that Parliament had instructed us to undertake, and the issues that were being raised were quite passionate, and it was them stop. Gauteng has the distinct advantage of being, in reality, a global city region. It has the levels of urban integration and the levels of concentration of economic activity, taking advantage of the different regions of the province that position it in a beneficial way. If you think about Ekurhuleni as the industrial hub, Johannesburg as the financial hub, and Tshwane has a significant industrial base from the automotive sector, the capital of the country. So you have that level of concentration in an urban conurbation that provides Gauteng that global presence and ability to compete at that level. It is also, in many ways, the center of logistics. Whilst it is not in itself a port, if you look at movement patterns throughout the country, moving goods and logistics through Gauteng is central to trade into the continent and trade from the continent into South Africa, but also going into the ports of the country. So it is positioned strategically from an infrastructure point of view, railroad networks, critical infrastructure that enables it to essentially play that central role as the heartland economically of the country.
Minister, we've just had a conversation on infrastructure broadly and project preparation as an aspect of that infrastructure investment drive. As you talk about Gauteng being a center of logistics, if you were to highlight what more could we do faster, simpler, that could really see that center of logistics anchor itself and become even more optimized over time?
Well, firstly, let me say that Gauteng has positioned itself in a very progressive way. If you look at the special economic zones that are being driven in the Gauteng province, we recently announced the VAL SEZ and its approval processes. We've been engaging on matters of expanding the Tshwane Automotive Special Economic Zone, particularly from the point of view of expanding its capability from new energy vehicle production as a center. So in many ways, you have to take advantage of what you already have as a starting point and say, how do I grow from there? But it is also a magnet for entrepreneurship and entrepreneurs that come into the country. It is host to most of the regional headquarters of multinationals, and therefore your ability to coordinate the efforts of these multinationals as they seek to enter different markets on the African continent, I think is important, because if you are the headquarters, you have the ability to coordinate the activities of those enterprises that come into the continent. When we engage in many of the trade engagements with our counterpart countries, many of them see South Africa as the country in which you are able to launch your entry into the African market, into taking advantage of the Africa Continental Free Trade Area. And if indeed that's the opportunity that you provide, it means that you need to locate where actually the concentration of headquarters is, which is actually in Gauteng. And the trick, I think, is for Gauteng to take advantage of that locational advantage and use it to propel industrial activity and economic activity in the region.
Minister, I think that's a very useful way for us to bridge towards the conversation around the African Continental Free Trade Agreement. But before we get there, I really wanted to pause at this idea of the extent to which we're really collaborating or working with other city regions on the continent. There's always a question that says, are we competing or are we collaborating? And I wonder whether there's a third way of both and.
Or as they say, co-opetition.
There we go.
So in essence, the ability to collaborate whilst you compete. Of course, you'll continue to compete for presence of investors. You'll compete to attract global headquarters. Yes. You'll compete to position yourself as the premier destination for particular activities. But there's a lot of complementarity that has to take place on the continent. And that complementarity has to take advantage of where we are as the global economy now. The global economy is undergoing significant transitions.
Yeah.
And those transitions are, let's talk about the energy transition, the decarbonization transition. That places us at the center of these transitions if you think about the mineral deposits that you have. It is a question as to how do we integrate these mineral deposits into industrial effort,
Sure.
that's going to position us strategically. And the issue is, sometimes we make the mistake, even as South Africa, to think that all industrial activity should take place here and the other countries should bring their resources here. But if you are able to, and I'll use an example in one of the industries, the automotive sector, we've been having this conversation about. Well, in the context of the Africa Continental Free Trade Agreement, we've been debating issues of what constitutes rules of origin and the percentages of rules of origin in the automotive sector. The countries that have the industrial base to build these vehicles will always argue for higher rules of origin. The countries that do assembly or SKD will necessarily argue for lower rules of origin because they are relatively smaller countries. Those activities are significant in terms of their local economies. The trick is, how do you ensure that they are able to benefit from the industrialization effort whilst encouraging higher levels of rules of origin? Because if you don't facilitate the activity to happen in our context in Namibia, why should Namibia give up its intention to build an automotive industry at the back of Seminokta? They are not going to do that. But if you give Namibia the opportunity to participate in the value chains and in the supply chains, then you're having a different conversation about how we benefit from each other.
So it's less about trade-offs, but more about a very intentional way of collaborating, of looking at the value chain as going beyond your national borders and looking for opportunities for other city regions to plug into that value chain. Minister, you mentioned, of course, the energy revolution. I think it's probably top of mind for all of us who might have driven here today and know the impact of what's happening in the broader global context. I want to go to your highlight of the minerals deposits that we do have. What are we going to be doing differently? What are we doing differently to ensure that we're not repeating historical patterns where minerals have not translated into the economic benefit that we anticipate?
Well, firstly, I think that the country has adopted a critical mineral strategy, and a component part of that is the industrialization effort at the back of the critical mineral strategy. So we have an industrialization program. Departments have been assigned responsibility. As a department, we are the lead department on the industrialization effort with regards to critical minerals. There's a lot of research that goes into it, so you have to take advantage of both local intellectual property that's being created, but also the ability to attract investors into the country that would want to come into the country. So that building of that capability is important. Locating and strategically positioning your special economic zones, your industrial parks to play a strategic role in that effort is also important. And that's what we're working on. As a department, we've revised our special economic zones approach. We cooperating and have been in consultation with the provinces around how that implementation would happen. And now designation takes a different view. Designation says that we want to designate this special economic zone to enable us to drive an agenda on green hydrogen. We want to designate the special economic zone to ensure that we build battery manufacturing capability as a country. So that's an important part of how you're going to be able to succeed. You have to design your incentive schemes such that they promote these technologies. We've just announced, and it's just started, an incentive scheme for new energy vehicles. So you've got an incentive that facilitates new energy vehicle production in the country and attracts those sort of investors into the country. So your policy instruments should do that. But we've also made significant progress in one of the issues that have been topical in South Africa, which is beneficiation at source. Now, the way in which we've been engaging in trade negotiations and trade deals with other countries is to say you don't come into the country just with the intention of taking the minerals, putting them onto a train, getting them to the port, into a ship, and getting them into your country. It must be a different relationship about how you invest in the country. So one of the most stark examples is the deal we've entered into with the European Union, the Clean Trade and Investment Partnership. It is a 12 billion euro partnership arrangement we've entered into with them. And underlying that partnership is an agreement that they would bring research, they would bring technology, that with technology transfer that comes into the country, they would build capability in the country so that manufacturing happens at source. We're having similar negotiations right now with China in terms of a green industrialization effort, and you would know that the bulk of what we export to China has been mineral products and agricultural products, and we're now evolving into improving the quality of trade that we're having with them on the basis that they now come as manufacturers onto the continent and in South Africa. And some of these have been expressed through investment announcements that they have made. So it's about ensuring that you structure your relationship with these countries in a manner that's beneficial to industrialization at source, but also ensure that that links to regional value chains.
Yes.
One of the things that we're doing now actively in special economic zones is to create regional special economic zones or cross-border special economic zones. Two examples, we're talking to Mozambique around the Nkomazi Special Economic Zone and its link to the port in Maputo, and creating a joint special economic zone, a cross-border special economic zone. We're having similar conversations with Zimbabwe in this regard. But we're also having conversations with Egypt. So we're talking to the Egyptians about how do we create reciprocal benefit in our respective countries. Sure. A dedicated special economic zone for Egypt products in South Africa to access South African market and regional access into the South African market. And we have a South Africa special economic zone in Egypt. So that's an active discussion that's currently taking place between us and Egypt. And it is that level of thinking about finding joint solutions. These are at nascent stages, and we have to build on the basis of the agreements that we have. But ultimately, all these have to make sense to the businessman.
Yeah.
I say businessman consciously worried
Businesswoman
about the gender sensitivity. So to the business person, it must be that it makes business sense to the investor. It can't just make sense to us at a political level where we reach agreements that are beneficial to our political intent, but business can't see where they are able to benefit in this investment. So that's also the next part of these conversations that say we need to take it to the level of entrepreneurs that make the decisions about whether to invest or not.
Minister, I think it's a very comprehensive response and very much appreciated, because as you talk about these nascent regional opportunities and the idea of reciprocal benefit, one gets the sense that these are the different pathways through which the African Continental Free Trade Agreement is coming alive, and we're creating more space to trade even between ourselves and to reciprocate the benefits of that trade. So I want to use that as a launch pad, if I can, to talk a little bit about the agreement, and maybe ask you to share with us any examples of either industries, corridors, or partnerships that have caught your attention and are symbolic and reflective of an agreement that is that has gone beyond an agreement, that is truly in operation and is now beginning to do the work of impact on the ground.
Well, firstly, I should say that trade at the back of the African Continental Free Trade Agreement is increasing progressively.
Yes.
So if you look at the trade numbers, and SARS recently released the numbers, there is a significant increase in trade that happens on the continent. But at the level of implementing as the AFCFTA now, one of the if you like, key initiatives that we're driving is in the automotive sector. The FCFTA has created a facility that is a $1 billion facility initially to enable and facilitate automotive industry development on the continent. We have been engaging with industry both at the level of the continent, but also NACAM in South Africa about how we're able to then take advantage of that. We've reached agreement on the rules of origin that I was talking about earlier. We've now reached an agreement this year on what those rules of origin would constitute. And we are entering into an automotive pact with the manufacturing countries. We've been to Algeria, we've been to Egypt to talk about the automotive pact and the implementation of the automotive pact and how we complement each other in terms of automotive manufacturing. But what's important with this effort is that it's not just a government effort. It is an effort that we are undertaking with AAAM, the Africa Automotive Manufacturing Association, and of course, local manufacturing associations. But it's also an effort that we're undertaking with the component manufacturers, because these are crucial. Sometimes when we look at the automotive sector, we don't take into account the reality that this is constituted by different components.
Yes.
And therefore, the component manufacturers are a critical part of the engagements that we've been having to ensure that this is able to happen. Now, we look at it as a flagship initiative because it is cooperation with industry across the continent. It is a pact between industry players locally and across the continent. It is taking advantage of the fact that if we cooperate, if we have tariff-free access for certain products into market, into, let's say, Egypt, and they are manufacturing a particular vehicle, those components are considered to be local in Egypt for purposes of manufacturing. And when that happens, they are able to export that product into Europe. Suddenly, it brings us closer into the market when, in fact, we've been much further from market and can't take advantage of certain benefits that we can take advantage of. So for us, it is one of those that we look at and say, this is the one we have to get right that would help us build into other industries. Not that because we're stopping the others, but we're saying we're driving this as a flagship initiative.
Ministers, before I let you go, we've got 2 minutes left on the clock. Just last week, you were on the South African Investment Conference stage, leading the conversation there around investment growth and capital raising at a national level. Today, we found you in this conversation at a provincial level. Can you close the circle for us, and in particular highlight the significance of Gauteng's contribution to the broader investment pipeline for the country, but also Gauteng's contribution to the continent as a closing remark?
Well, firstly, let me say that the investment conference demonstrated the extent to which industry and local entrepreneurs have gained greater confidence in their ability to invest in the local economy. I mean, you know, if you think about it, a year ago, when the tariffs in the US were introduced, we were at a point of anxiety as a country as to whether this would decimate certain sectors in the South African economy. We've been able to survive because industry gained confidence in our ability to facilitate market access into alternative markets, to negotiate better deals, to provide the necessary support mechanisms, and therefore they are able to invest in the South African economy with an understanding that, amongst others, the key constraints to growth are being addressed. The energy issues, logistics issues that were key constraints to growth are being addressed, but also because they understand that, in fact, practically, we find solutions with industry in certain areas. We literally work with industry in facilitating how we're going to enter into an agreement. So as we accompany the president on a state visit to Spain next week, part of what we do is to work with industry that we're targeting to go into that market to say what are the solutions that we should be negotiating in those sectors. And that facilitation enables greater confidence in when we sit like this between government and industry. These are not just talk shops. These are real conversations that enable us to take messages through to trading partners, to investors, and ensure that those messages are translated into actual investments.
The final question that I've got for you, Minister, is 3 years from now, you and I are sitting back on the stage having a similar conversation. What is the headline read that captures Gauteng's contribution to investment on the continent?
Gauteng headlines South Africa's growth. And we have to place that responsibility on Gauteng because of its strategic nature, because of the asset base that's in the country, because of the financing of industrial capability that Gauteng has to provide. And the Gauteng government plays a role beyond government itself. It is its ability to nurture and drive what industry decisions are made.
Honourable Minister, thank you very much. Ladies and gentlemen, a big round of applause for Minister Parkstyle. Thank you, sir. Thank you, sir. I'm not sure if you missed that excellent play on words in the moment. I thought I was going to stump the minister because this was not part of the questions we'd put to him, and there he had it. Gauteng headlines, Africa's growth. I think it's a fantastic headline that we're going to be looking out for. Ladies and gentlemen, standing by, I have the panel that I promised you was going to come and get us to the last panel of the day before we go to the crescendo of our morning, and that is, of course, the investment commitment moment. So standing by, please let me welcome Zinathi Guma, business anchor at CNBC Africa, as she comes up and takes over the running of the panel. Let's give her a warm round of applause.
Thank you so much for that warm welcome, Nozi. Good morning, everyone. As has been mentioned, my name is Zinathi Guma, and I'll be moderating this next panel discussion. I'll be joined by leaders who are shaping the digital economy, not only in Gauteng, but in the broader continent. And this is a very, very exciting conversation that we're about to have, because it really gives you the feeling that you are looking into a crystal ball. What does the future look like with technology at the center? And this is my first time moderating the Gauteng Investment Conference. As with Sam and Nozi, my crystal ball is telling me that I will be returning after this. I don't know who I need to talk to, but maybe MEC Maile. He's looking down. I'm returning. My crystal ball says I'm returning. I got a thumbs up. I got a thumbs up. The African growth story is a very interesting one. There are many narratives around Africa's economic potential and outlook. And one that I like holding on to is the narrative and the projection that Africa's economy can grow by 10% in the future, say the next 40 years. And one of the key pillars of that rapid growth potential is technological innovation. And that means that the digital economy stands to not only contribute to Africa's economic future, but to be at the center as the engine. So in this panel discussion titled Digital Economy, AI and Future Industries, we will explore the business of Gauteng as the hub of technological innovation. We will interrogate what effective models of investment should look like, while ensuring that advancement comes with priorities of environmental responsibility and inclusive growth. And so, this is where strategy, infrastructure, investment policy, and real-world impact meet. But before we get to the robust discussion that I will be having with my panelists, I'd like to invite on stage to set the scene for us with the opening remarks, the Gauteng MEC for e-Government, Bonginkosi Dlamini. A round of applause. Do we have a mic?
Is it still morning? Good morning, ladies and gentlemen. My name is Bonginkosi Dlamini, as I said, the MEC for e-Government. I am not going to go to all my presentation, just to set a tone that as the Department of e-Government in Gauteng, our responsibility is to make sure that we digitize government services, we make sure that we roll out the bread bond, and thirdly, as the Premier said in his remarks, that we are also thinking out of the box to make a partnership with the private sector in order for us to digitize our province and make sure that we don't leave our people behind, because you can digitize, but if you don't connect your people, therefore it's useless. Secondly, we want to be the digital gateway of Africa as Gauteng. That's how we are positioning ourselves. Therefore, we welcome the partners who are in this conference to contribute towards the strategies that we need to tap on. Secondly, we're looking for financial partners to make sure that we roll out our PPP in trying to digitize and not be left out, more especially also on the issues of your cybersecurity, because there are threats, and we need to have partners to do that. Therefore, without wasting your time, I will not go through all my remarks, just to set the tone that we are here to look for partners, to invest in the sector, that we make sure we grow Gauteng to become the digital gate of Africa. Thank you very much.
Thank you for that. Nice, short and sweet. And of course, looking at these partnerships, we have the private sector players that I will be talking to, and we have investors in the room, and it's going to be quite interesting to see the conversation and some of the questions that are directed to you, MEC, in that endeavor to make the environment more fertile for them to grow in the digital economy. To get to the meat and potatoes of the digital economy advancement investment, let's hear from the esteemed panelists from the different corners of the economy, and I'm going to call them up on stage one by one, and please may you come up as I call your name. So first up, Sandile Dube, the Managing Director for South Africa at Equinix; Ziad Suleiman, the CEO of Cassava Technologies; Mark Harris, CEO of the Chimologong Digital Innovation Precinct; Semare Taukobong, the CEO of Telkom; and Richard de Roos, Head of CIB Operations at Standard Bank. Please give them a round of applause. All right, so I'm going to take this theme, going from the vision that we need to have in Gauteng's digital economy as it positions itself as the innovation hub of the country, but also the continent. And then we're going to get into the nitty-gritties of what will actually get us there, the implementable action plans that will get us to that vision. Sarame, I want to start off with you. What does Gauteng's digital economy need to look like so that it does scale this position and a strong position in terms of being this innovation hub that drives economic growth with technology at the center in Gauteng, in South Africa, and on the broader African continent?
Thank you, Zanati. I hope I'm audible. So I think the MEC has moved from the economy, so I thought I'd scare him first. And it's usually nice to start with where we are in the world.
Yes.
And if we compare ourselves, because we're talking about, and we were talking with somebody outside about data centers. There's a small local data center being built.
Oh, I think the mic is...
Maybe I must get a...
There we go. I think we have you back.
So the project NEOM being built by Data Vault, when it's completed, that AI data center will be 5,000 megawatts. It's a 5 gig AI data center. It's the size of Modipu Power Station. So to put that 5 gig in context, the current data center capacity in the continent of Africa is estimated to be about 400 megawatts. Right? If we bring it down to South Africa, we currently estimate it to be about 300 to 450 megawatts. If we bring it down to Gauteng province, we're about 130 odd megawatts, right? So that one AI data center in Saudi Arabia is 15 times the size of the total data center capacity in Gauteng province alone. So that is what we are competing about globally. But we are South Africans. We fear fuck all. Okay. So let's not be scared. And I think the key thing for us is, what are we competing about and what are we building?
Yeah.
And what's important for us is, that's the premise we should be creating. That we're not competing for hyperscaler type data center capacity. But let us look at what is the need that we are facing. So what the Saudis have built is that old philosophy of, we'll build big and they will come. What we need to identify quite clearly, and I think it's a good ending point to where the minister ended, is that we've got the demand
Yeah.
right here, particularly in Gauteng. We need to build for the demand that is sitting here. And what it's pointing us to is that we need to build for more low latency, edge and distributed infrastructure. And that is the key, because what the key demand is, in South Africa, we've got the demand. Just look at what's sitting around here. We've got the banks, we've got a mature telco ecosystem. Just Telkom alone has 180,000 kilometers of fiber. We've got undersea cables. We've got mature retailers. The demand is there. But what it's looking for is for low latency, edge distributed data center ecosystems. But that requires reliability of power. And that is key for us, that it is an edge distributed, low latency demand ecosystem that we need to build for in South Africa. The demand is there.
Yeah.
We've got a very mature ecosystem, but it needs reliability and consistency.
Yeah.
And that's what we're key for. Because if we build it, Gauteng alone, at 130 megawatts power right now, is almost 60% of the data center capacity in Africa. So MEC, Minister was not wrong. We can be the distributed data center and AI ecosystem for the continent.
Yeah.
That is the ambition we need to build for.
Yeah. Very interesting points that you make there in terms of where we are in Gauteng versus the rest of the world in terms of the capacity, but there is that demand. And Sandile, I want to come to you because Serame talks about the data centers. Talk to me about the vision then of this data center ecosystem that Equinix has seen in South Africa and Africa as a whole.
Yeah, absolutely. So I think as a start, South Africa is a center hub and is really connections hub. Therefore, the need to do accelerate. What do we then need to do to South Africa as well as Johannesburg to the next level to really take advantage of the opportunities that are represented to us? And shifts that are happening in the world in quite a number of developed economies, particularly the likes of developed economies in Europe and the like, where they've put a moratorium in data center constructions for very specific reasons, and largely those reasons are related to energy.
Yeah.
And I believe that as South Africa, if we can really try and resolve, to Sarame's point, and resolve some of the challenges that we have from a power point of view, we then stand the opportunity to attract some of that international investment to come into this region to further accelerate the growth of the economy and have a direct impact to our citizens in the country. In relation to the ecosystems that you talk about, there's not one entity that can deliver it alone. And I think that's the beauty about data centers and ecosystems.
Yeah.
Quite frankly, when you build a data center, it's been proven that it's such an enabler to all other industries. So when you build a data center, you're enabling opportunities for a number of industry, be it construction, be it logistics, be it finance, and the like. And that's where we need to be doubling down our efforts in ensuring that we're supporting investors. We're making it easier for investors to come and invest in this market so that not only the ICT sector can benefit and meeting our objectives in digitizing our economy, but also just creating the pull-through opportunity and the pull-through upside for a number of sectors, because it's proven that this is an enabler.
Yeah.
And we've also seen where studies have been done, particularly by independent studies, that have shown that data centers have a direct correlation and contribution to economic growth. By using one example in a certain market, which I will not mention, just the construction of a data center alone had proven to yield up to or beyond 3% contribution to the GDP. Wow. And therefore, that requires us to be quite intentional about the energy that this sector requires so that we really accelerate our economic growth and we create employment opportunities for our youth.
And I mean, yeah, we do know that infrastructure is really the backbone of sustainable economic growth. Even now, we do have the government setting that as a priority, that investment in infrastructure. But I mean, it's not just about infrastructure and the actual assets and the data and really what it enables us to do in business, but also a true measure of value for this ecosystem, right? And all this investment will be in the well-being of communities. Ziad, I want to come to you because then how do we measure that value? What does the improvement of communities actually need to look like so that we see that all this is working for the good of our communities?
Yeah, thanks, and good afternoon, everybody. I think ultimately, when you look at the impact in society and the growth of the economy, that's the ultimate yardstick. The issue is, how do you get there? And when we look at the convergence of technology, it's not about a single source or a single silo. It's really around all the different pieces of the digital economy becoming harmonized. And when you look at that, it's everything from the very essence of core connectivity that allows people to participate in the digital economy, and how you utilize the data, how do you secure the data, how do you create applications and promise to businesses, how do you create the environment where people are able to flourish and are able to perform e-commerce, and ultimately, how do you then introduce the fact that normal people can have purpose? So how do they integrate into the society of a digital economy, and how do you get the harmonization? So I think it's important to take a step back and say, as Sandile was illustrating, the ecosystem and saying, what are all the different facets that come together that create this fertile landscape that allows people of different mindsets, of different requirements, all to flourish. And that means large enterprise has a place, they have to play. Small, medium business has a place. How do you make it affordable for them to flourish? And how do you make sure that you give them the platform that not only do they participate in the local economy, but they're also attractive globally? And ultimately then, how do you get the skills base to actually support all of that growth? So when you look at the harmonization of all of these things coming together, that's the essence of impact. And the true measure of that is really reduction of unemployment, growth of the economy, making sure that people wake up in the morning and they have purpose, allowing a conducive environment where people don't feel inhibited, but they feel empowered. And ultimately, that empowerment of how they participate in the broad stream economy is the yardstick. When we reach that stage, and ultimately people feel like they have a ticket to the game, then you can say, yes, the digital economy is working because affordability is right, the environment is right, the opportunity is right, and people feel as though they are contributing.
And that's the thing, right? Because also it needs to support the brains of the economy, and those are the startups and the AI talent. And Mark, I want to come to you with that because you nurture and grow startups and AI talent, and understand that AI is a productivity multiplier. But how do we get to a point where the digital economy is a multiplier of jobs, skills, and entrepreneurship?
Unati, thanks. Maybe I just want to, rather than talking about AI, just lift it up one level, because I think the issue is far broader, right?
Yeah.
The issue is about really becoming a digital economy, and all these things get mixed up. It's about digital transformation. Then you go into enterprise development or venture capital building, and then you get into what are the digital skills required, and then you look at the role of government, of large corporates, of universities, of schools. So this entire ecosystem is something that in Gauteng we need to get right, yeah? Because there's a base philosophy, and the philosophy is that if you cannot create new enterprises at scale, you're not going to change the economy, because that's where your unemployment gets resolved. And I always talk about the valley of death, right? And unfortunately, the valley of death for us is real, which basically is three areas, right? It really is about when startups go into innovation, which is quite critical, and it gets bandied around as AI, etc. But innovation is on a broad scale basis. And when you look at that, startups struggle with three things, right? They basically struggle with skills. They basically struggle to get funding to sustain themselves. And then they have a market access problem. And if we don't create, to Ziad's point, an enabling environment to do that, we're going to have more than 80, it's like 85, 86% failure of these startups. So the infrastructure is extremely important. It's extremely important because without the infrastructure, you can't do it. But I've been quite privileged to sit through a number of really deep digital transformation, AI workshops, forums, etc. And South Africa has the potential. Gauteng has the potential. We've got some great creators and builders using AI. But the enabling environment, so I always ask the question, how did you get funded? And they said, well, we're having to bootstrap ourselves. Because, you know, the reality, it's tough. I admired the city of Joburg for one thing. Not only did they look at new enterprise creation, but what they also did is use the city to create market access that once these guys have invented or innovated on something, they can really go and implement it. And that's really been a tick in the box. Because too often people talk about enterprise development or they talk about their channel programs, but the reality, we have to create the market access and fund these guys for us to really be successful. So we see government making big moves in that space. I always get told by government as an example, there's lots of money available.
Yeah.
Yeah, the reality is, you know, we've got to build the ecosystem cohesively across the triple helix to ensure that everyone participates in order to ensure that these guys are successful. There's brilliant innovation. So there's no shortage of talent within Gauteng. You know, we're running a number of programs where we're helping these guys to ideate, come up with the innovation, but we've got to make sure we have an enabling environment that they don't go through that valley of death, which is a lot of them just disappear.
And we need money. So let's come to the financier here. How is capital actually showing up so that we do create this enabling environment for entrepreneurs to want to participate, but also to create this digital future that we are planning and we are implementing. I'm not going to say imagining because this is a real thing. We want real implementable action plans to come out from this conference. This digital economy future, how is capital showing up? And to really speak to the specific needs of Gauteng and South Africa.
Yeah, thank you very much. Thanks, Zanati, and it's great to be here. This is a fantastic conversation to be part of, and it certainly is a unique ability for Gauteng to leapfrog itself into a very strong position. We are in 21 countries on the continent, and it is no surprise that when we go into these countries, we have a very large, if not led, by infrastructure finance. And infrastructure in various parts of the economies, we are able to raise capital into those infrastructure projects, whether they be in mining, whether they be in roads and transport, whether it be in electricity. But the access to capital and building the foundational infrastructure is critical to us being able to fund a bankable economy and then grow our bank with that economy. We like to say that we are not only bankers, we're in the business of changing people's lives. And I think infrastructure is a key part of that. It is no less important in the digital world, and to leapfrog into the digital future, having reliable digital infrastructure, properly funded, attractive to long-term capital, is critical to the success of bringing the confidence of people to do what is possible in AI and in the digital economy. We don't see it as a one-size-fits-all. I think there are tiers of capital that need to be unlocked. On the one side, you've got the infrastructure, and I think that's very important, and we've done a lot of good work with the major players in the economy, as well as making sure that in areas like data centers that need power, that we are trying to bridge the gap between independent providers of electricity and take off into data centers to create reliability. But also, we've been involved recently in a transaction with Telkom, whereby we've released publicly transaction 6.5 billion rand back into their balance sheet by facilitating the sale of SwiftNet there.
So you're saying you're actually getting appetite for capital into energy to support this infrastructure build-out?
We're getting demand from data centers in the energy infrastructure to create. So people are seeing the future. I think the other thing, and to complete the ecosystem, which is critically important, we have a fantastic asset on this continent, and also in Gauteng, is that we have youth. We are, on average, a younger population. In the developed world, they are struggling with aging populations. We've got a young population. We have great investment in infrastructure to be mobile first led, particularly with our national assets such as Telkom, MTN and Vodacom, and releasing into a mobile first economy and bringing people into the future, I think is a fantastic opportunity. So it's an end-to-end. And in between that, you've obviously got the fintech. So each of them have different merits. It's not about funding one over the other or have a broad brush in terms of funding. It's about having the expertise to fund from infrastructure to fintechs to individuals that suddenly have, by using a fintech product, suddenly have a data history for banks to be able to bank them and fund them and leapfrog them into a future. So I think it's very exciting times. We're broad-based in this, and we are directly involved and look forward to leveraging this type of initiative, which is music to our ears.
Sir, yes, Sandile?
If I can add, so I just want to pick up on the comment around the potential. I think it's very important that we know we have potential. We know we have tremendous amount of potential. However, we need to get to a point where we really accelerate and become very intentional about the execution of that potential so that we can realize the benefit of that far quicker. I see there's an opportunity cost with delays that are associated with the lack of execution.
Where are those delays that you're seeing?
I'll come to that now. But I also think that, when you start looking at data centers as an example, particularly in an economy like ours, it's very much important that these are not assets that merely give us a certain type of experience. In some cases, these assets really can be the gateway to international markets. Yeah. So then when you start thinking about a South African entity that is operating here and that instantly has access to trade in international markets, you can then start to realize the benefit that too these data centers can bring to the local economy. With regards to some of the bottlenecks I see, I think it's predominantly related to policy shifts as well as regulatory shifts, and also the red tape that has already been spoken about. I think when one considers the process from inception to completion, it just takes way too long. And as operators and investors, you look for stability, number one, you look for ease of doing business, number two, and you look for potential. And I think if we can address some of those elements, I think we will be well on our way to really accelerating more growth than we actually anticipate.
Regulatory shifts in terms of actually building out and getting those permits and approvals for building out that infrastructure, is that?
Yeah, that's one of them.
Yeah.
And I'll give you another classic example. So let's talk energy, for instance. If you look at the majority of the data center assets and where they are deployed in the country, the vast majority of them, they're actually in areas where they draw power from a municipality. And you only have a select few that draw power directly from Eskom. And then there lies a disconnect.
Okay.
As an operator where you draw from the municipality, you pay a premium through the municipality, whereas when you draw directly from the utility, being Eskom, you draw at a much lower rate. So why is that discrepancy? Why does it exist? Secondly, if you look at the consumption of power, Surama spoke about the number of megawatts that we have, but also if the projections are true, there's quite a significant amount of power that data centers will consume over the next period of time. Therefore, from a tariffs point of view that we incur, that also becomes quite a simple trigger that we could leverage to say, okay, listen, because of the amount of consumption that you consume, let us lower the tariffs, let us fix the municipality versus Eskom rates. That becomes a quick win for us.
Yeah. Ziad, you wanted to?
Yeah, look, I think this is a critical point. In order for us to be attractive, we've got to get a number of things right, one of which is the skills, and we'll come back to that. But if you look at this point of affordability, it is critically important not only for the local environment for people to participate, but it also is critically important for us as businesses to be attractive to larger players across the globe. Because remember, this is not about us competing amongst each other here. This is about us attracting investment and workloads from other parts of the world into South Africa. By creating that opportunity, it gives us as businesses and smaller businesses the opportunity to create hubs. That creates employment. But the affordability is a critical component of how you attract that. It's not the only component, because what you also need is, over and above the skills, you need to make sure that you have the reliability, the dependability, and the certainty to be able to deliver. you need to make sure that your regulatory environment is conducive to investment. Your incentives have got to be good. So there's a whole lot of factors that come into how do you drive the economy, and these are just some. And when you look at this digital economy and digital transformation, starting from the very essence of connectivity, that has to be affordable. When you carry the traffic using multiple carriers, that has got to be affordable. When you land in a particular place, how do you protect the infrastructure, making sure that there isn't vandalism? Because otherwise you have cost upon cost. How do you create bundles so you don't have margin on margin? How do you then take it one level further to say, do we have innovation that is actually driving better solutions? And how are we as a country and as a province better than our competitors in any other part of the world? So bringing all of these things together is what the answer is. And that means that the ecosystem has got to work. So it's a great discussion because therein lies lots of different loops, but lots of alignment that is required. And in that is lots of opportunity.
Well, just on that, Ziad, I mean, Cassava has a partnership with NVIDIA.
Yes.
I believe that the AI factory is going live tomorrow, and you're talking about those GPUs that are energy guzzler. How then are you approaching that question of energy?
Yeah, thanks. Look, the AI factory, firstly, is extremely exciting for the country. We don't see it as being a monopoly for us as Cassava Technologies. We really see ourselves as being an aggregator for the market. So when we look at it, we look to the ecosystem, whether it be researchers, whether it be system integrators, whether it be global SIs, or other facets of the economy, including large enterprise customers and small, medium business, to utilize the facility. So I think that's the first point. The ability of our company to have a partnership with NVIDIA is, again, a great boost for us as a country and as an economy to be able to attract the best technology of supercompute power in the form of these H200 NVIDIA chips. So the fact that we have it in our country means that we do have sovereignty. It means that we can price in a local currency that is certain and predictable. It means that we have a model that makes sense not only for our own environment, but also for offshore.
Yeah.
And then when you look at the capability of what this provides, is it provides true AI. So not only does it provide the supercompute, but what we also have now is we have the entire AI library with NVIDIA of all use cases throughout the world across all the different industries. So if we talk telco, we're able to show how AI can practically support that environment. Banking, mining, retail, and so many others. This is the true value. Coming back to your point around, is it an energy guzzler? The reality is that in our data center, which is in Cape Town, we have 9 megawatts. This takes up a third of that particular facility. We have ample power, we have predictability, we have enough resilience, and we have multiple sources of power. So for us, it's an enabler because why it differentiates us in the market. It gives us something that the market requires, and in fact, becomes attractive for other business to come into South Africa, as well as enabling the local environment. So conducive to growth, growth in many different respects across all these different facets of the economy.
Saranga, you can make your point, but also I was coming to you because you highlighted the issue of energy. How do we get to mature solutions that will service this demand, but also service them in a fair way in terms of energy security that does not negatively impact communities?
I think that it's a long journey, but with short, immediate steps. You know, we've all talked about the demand, and we know who the players are. You know, it's not just Eskom, it's not just the industry that's creating the energy, it's government. You know. And for us, it's easy for us to sit here and say government must govern us. But how do we get around the table quickly? Put down the needs. Where are the key issues? Is it about way leaves? Is it about demand planning? Is it about seamless wheeling agreements? You know, what can be done today? What can be done tomorrow? But equally, what do we also bring into the table? I think where we come at fault as well as industry, we're quick to complain, but not provide solutions. So what are we solving for today? What are we solving for in the long term? Because that's also important. Where are we adding capacity in government to drive those policies? Because policies don't write themselves. We need to be able to bring the capacity on board to say, we need ABC sorted out quickly. So if it's an issue of way leaves, get that done, sort it out. If it's an issue of wheeling agreements and speed of that, there it is there. What are the priority areas? What are the areas that have been segmented for this development of AI and edge distribution? We can't all be building massive terracos that have been built. But the key thing is, where are the edge demand centers? Because if there's a plethora of these, it's going to compound the grid. What are the priorities? It's clear that the current fleet on the ground is 40, 50 years old. That needs to be upgraded first. But where the new areas, where the areas that have been zoned and demarcated for new developments, build there firstly, build there quickly. So that's key. But the point I was going to make before we close, because we all talked about, talk is talk, but where's the action?
Yes.
Key as well is leaving the youth behind. Education, something that you and I are passionate about. So, Premier is here, MEC is here. What commitments are we making to actually empower and develop the youth? Premier, I've made the commitment to you, I'll make it to you again. The telecom fiber footprint in Gauteng passes 428 schools. We are committing to connect those schools with a minimum of 500 megabits of fiber per second. Telkom is committing to commit those schools 500 megabits per second of fiber free, because that is our commitment to ensuring that we are connecting the schools in the province, because without our schools being connected to reliable digital fiber, then this AI pipeline we're talking about is false. Because we need to start getting connectivity and our kids being trained with the highest levels of coding from basic levels. And those are the commitments that we as industry also need to talk. We have this fear of public-private partnerships. There is one that is working. I happen to run one. It's a small one called Telkom. It works. There's a living proof of a good listed government-owned ecosystem that works. So it's not a fear.
Yeah.
We are living proof that public-private partnership actually does work.
Mark, your comments there?
Yeah, so a couple of things, right? I think Rami again said something important. It's okay to think large corporate when you talk about Gauteng investment. But really, we cannot leave a lot of people behind. And the reality is that there's different segments of our population who needs our help more than worried about just building or funding infrastructure. Yeah, we go into communities, we go into townships in order to understand what are the issues that they're facing. So at Gauteng, we've got to work at all levels. It's too late. We can teach coding, that's one, but it's too late. By the time people want to be entrepreneurs we have to go back to the school levels. We have to get the universities totally integrated. And unfortunately, our world has changed. We can sit here, but the reality, because of AI, our world has changed. And there's a lot of barriers that now exist in all types of professions through the use of AI. And I think it's all our responsibilities to unleash AI on the youth. Yeah? Because the people will still be the people who are already privileged, who will use these new technologies. And it's not just about AI, it's about robotics, it's about drones, it's about AI, it's about data science. And I think as a society, we have to reach out, not just via schools or communities, I think across the board, to ensure we don't leave the youth behind, make these technologies available to them, do as much education and training to all segments of our population, for us to be successful into the future and to have the economic impact.
Sandile, just, on top of the point that you want to make, because we talk about the fact that we have to see this real world impact. A lot of pledges are being made right here, and actually Serame just highlighted one where we will actually see the impact of that investment fiber in terms of education and skilling. And I'm just wondering, with all these pledges that are being made here, how then does that filter through to real economic value? What needs to close that gap between these commitments and actual value from those investments? And does there need to be some hand-holding for the investors that are actually investing in Gauteng?
Sure. Hello.
Let me just take one step back. Just make one quick comment around the point of energy. One thing is true, yes, data centers do consume a lot of energy.
Yeah.
We know that. However, at the same time, they also generate a lot of heat, a lot of good heat that could be put into good use. However, what we have not figured out as yet is how do we then channel the heat generated by data centers into good use? We could use that as an example to power up local economies. However, when you do that, you then lessen the burden that we then have on the national grid. So I think there also lies in another opportunity that we need to explore further. In relation to how do we then deliver that felt impact in our society, I think that, yes, it's great that we have pledges today, and we also had some pledges last week.
Yeah.
However, in my humble opinion, if the pledges are not executed or converted 100%, I think I wouldn't define that as success.
Yeah.
And therefore, in order for us to hit that 100% mark, we need the entire ecosystem. We need ourselves as investors, as pledgers, but we also need to partner with the government, with the various organs of state within government that will become accountable to the execution of those pledges to 100%. The quicker we do that, the quicker we realize the value, the quicker we create employment opportunities, the quicker we teach the youth and the like. I think there's also been some examples where investors will come, they make the pledges, and then they get frustrated by the bureaucracy in the process, and in some instances they end up actually withdrawing the pledge. So I think for us, we need to collectively partner in really targeting 100% conversion of all the pledges that are being made, and the only way we can achieve that is through collaboration and through partnership with all the various stakeholders that are participating in that process.
Thank you for that. Ziad, I want to come to you because, just looking at, the investment landscape, a lot of the time we focus on foreign investment, right? And not necessarily what domestic capital can do. And there is domestic capital that actually wants to work. And I'm just wondering then, how do we stimulate that domestic capital so that it can be able to do what it needs to do? But also, that works in the favor of this data sovereignty agenda that we want for Africa.
Yeah, for me, in a simple way, I think it all comes down to demand. If you are able to create a niche offering that's reliable and that has demand, whether local or offshore, I think that's the stimulus, right? So the question is, how do you create that demand? And when you look at it, you create a tangible value proposition that you can rely on, that multiple people within your local economy as well as offshore require. Now, that takes me back to a point that I wanted to make, which is around the skills, which Serame was talking about.
Yeah.
Because this point of giving people the connectivity so that they can learn at schools and that they can operate their businesses is critically important, because that's part of giving them the purpose to wake up in the morning and be enabled. So once we create that enabling environment, now what we're able to do is allow them to express themselves. When they express themselves, they create the niche offering, which means that they're able to contribute. In order to be able to do that, this enabling environment allows them to move to step 2 and 3. Once they've done that, it comes back to your point around how do you then generate the capital locally? Because it's all about promise, it's about purpose, it's about meeting a demand, and it's about meeting a core requirement that people require. So in that then, it's the interweaving of the ecosystem, because an individual or a small business or a single company does not have a monopoly over the economy, nor the digital economy.
Yeah.
So therefore, we are all intertwined and we all need each other. In our business, we have 5 businesses. We have Liquid, which is all around connectivity. We have 3 data centers, we have a fintech business, we have cloud and cybersecurity, and now we have the AI business. But even with that as an end-to-end digital transformation format, you still require many other components to come together. So, in order to get those other parts of the economy playing together with you is where the demand comes. When the demand is there in each of those different loops, then the capital's there. Because there's no shortage of capital, really. And my banking friend Richard here will talk more about that, but the reality is that you need to create the attractiveness. And part of the attractiveness is you almost have to be predictable and guarantee the return on investment and the longevity and sustainability. If you're able to answer all of those questions, there's no issue.
And Richard, I mean, what are some of the key considerations that you make when you are financing or funding businesses within the digital ecosystem? But also, I want to ask because this is a big ecosystem, right? But even the financing ecosystem is a pretty big one. I was reading a report from the IMF this week that said that emerging markets are relying more on non-banking investors from non-banking sources. You cannot carry all that weight. So what is your role in terms of collaborating and bringing together all those investment sources?
Yeah, I think that's a very good question, and I think we've got to see, as much as we see in data infrastructure and reaching people as an enabler of activity, an enabler of future relevance in the economy, I think you've seen a similar parallel play out in the payments world.
Yeah.
The bankable opportunities and the ability to leverage individuals, small businesses or technology businesses is starting to play out very nicely in the payments world. So we see the opportunity to do, you can do 3 things in the payment environment as a bank. The payments are no longer the domain of banks. There's a payments industry, and we as banks have got to do a number of things alongside that. We have to compete. I mean, that's what we do. We're always in the payments world. But there are great opportunities to bank those payment providers, and there are great opportunities to partner with them. So the ability to reach digital payments broadly and quickly and provide the transactional information back into the large balance sheets of banks is the real opportunity that unlocks the potential of the future. So suddenly, if you assume that I am unbanked, and I run a small business which is also unbanked, and all of my transactions are in cash, there is no auditable data point for us to be able to make decisions to leverage that business. As soon as you bring them into the digital economy, and as soon as you bring them into payments, you start to have an asset that is bankable. You start to be able to use AI to really determine behavior, to look into the fact that each individual starts to have their own digital asset, which they can guard jealously and develop and build for themselves and become more bankable, more leverageable. And that, to me, is the exciting opportunity that exists here. So we embrace the fintech industry. And in fact, 40% of all fintech revenue on the continent is made in South Africa. So you can see the size of the prize that we have to develop here. The ability to take it away from transactional disruption to balance sheet leverage is large. And banks are looking at that across the continent, and I think that it's going to unlock tremendously. And it not only in individuals, but small businesses and fintechs alike. So the ecosystem is awakening.
All right. Well, we have less than 20 seconds. So I guess, let me give each of you 10 seconds. One actionable plan that you'd like to see beyond this conference, where we're not talking about what will be done, what has to be done, but what we are doing and what we should be doing right now. Serame.
Speed, execution.
Yeah.
Clear the policies.
All right.
Gauteng can be Africa's digital hub.
All right. Mark?
Scale new ventures by giving them capital.
Sandile?
Declare data centers as private REITs that will attract local investment, as opposed to relying on foreign investments alone.
Okay. Ziad?
Yeah, enable yourselves by using technology and partner, because not everybody has a singular answer, but working together is what takes us all forward.
And Richard?
Yeah, I think the analogy around, well, the old saying, it takes a village to raise a child. I think we have, to the comments that were made earlier on, we need to be steadfastly and determinedly, collectively ambitious.
Indeed. Well, thank you so much for your time, gents, and really, really robust conversation that we have here. And I hope that you've taken something away in terms of what you will execute from here on out. Leave no one behind, especially the youth. And we have proven examples of the private sector coming in and trying to scale up skills and education within the youth. But also regulation is really important. A lot of the time we talk about this energy issue, and we need to get regulatory certainty in there. But also a good point that Sandile made, that we do need energy for these data centers because that's how we get the economy growing. But at the same time, we need to find out how we can use the byproducts from that to good use. But also, government does need to be accountable for these investment pledges, and we need to start seeing real value from the pledges into real-world impact from those investments. Thank you so much to my panelists, and thank you to the audience for your ear.
Ladies and gentlemen, can we give our moderator a round of applause to Zinathi for an excellent job and an excellent panel. When we talk about the possibilities that get unlocked because of emerging technologies and AI, this is the kind of conversation that really makes tangible the emergent opportunities. Thank you very much, Zinathi. Ladies and gentlemen, we are at the moment of crescendo. This is our opportunity to focus now on the investment commitments that are going to be archived and recorded as part of the success story of the 2026 Gauteng Investment Conference. It gives me a great pleasure to welcome the MEC for Economic Development, Agriculture and Rural Development, Madame Vuyiswa Ramokgopa. And while we do that, can I ask for the podium to please come back onto the stage in time for Madame, if I can get assistance with that. While the podium is coming up, ladies and gentlemen, let me use the time to quickly just share a little bit about our plans for lunch, which we'll take after this investment moment. I need two strong gentlemen on that podium, please. Thank you so much. Technical team, could you please put up the slide for me that has the lunch arrangements that I could talk to while our two Sinatlas make themselves visible? Strong men in the room, thank you. All right, so on your screen right now, ladies and gentlemen, you'll see that there are 4 different colored lanyards. If you look at your lanyard, it should match one of those colors. What we've done to maximize the use of the restaurants available to us, and mindful, of course, about the capacity of some of these restaurants, we have just randomly then allocated us to different restaurants. So if your lanyard is green, you are going to Keystone and to the Bistro. So there's 2 places, you go to one of those. If it's blue, you either go to the Archer Bar or to Eatery. And then the yellow and the white is for the Protea Fire and Ice, which is just across the road. If you'd like to take a picture of that, if you think you might forget, please feel free to do that. And we will make sure that you are at the right and correct lunch venue. With that, thank you very much. Let's welcome our MEC as she comes to lead us in the investment commitment moment. Let's give her a warm round of applause, please.
Okay. Thank you, Program Director, Ms. Chabalala. His Excellency Deputy President Paul Mashatile, Honorable Premier of Gauteng, Panyaza Lesufi, Honorable Minister Park Stau, Executive Mayor of the City of Johannesburg, Dada Morero, fellow members of the Executive Council, the Head of Department of the Gauteng Department of Economic Development, distinguished members of the Diplomatic Corps who have joined us today, leaders of business and finance institutions, the CEO of the Gauteng Growth and Development Agency, Sthembiso Dlamini, and your team, and all esteemed guests present today, I greet you, Sanbonani, Dumelang, bonjour. It is a pleasure indeed to be with you. Allow me to begin. Has this worked? Is this working now? Can you hear me here? This side? No. All right, perfect. I will cede this mic. Allow me to begin by expressing my sincere gratitude to you all today for your presence and your participation and your contribution to what has been a highly substantive and action-orientated Gauteng Investment Conference. This has not, ladies and gentlemen, been a ceremonial gathering. It has been deliberate, it has been focused, and most importantly, it is grounded in the practical work that has to be done of building an economy that is growing, that is inclusive, and that is primed to create opportunities for all. The quality of engagement across all the sessions that this platform shows that this platform is moving beyond dialogue into a space of genuine strategic alignment. And I hope, truly hope, that these robust conversations can continue in the second segment of this program. To our investors and partners and international partners, your continued confidence in Gauteng and in South Africa is recognized and deeply valued. It affirms that even in a constrained global environment, the fundamentals of our province remain compelling. Program Director, allow me to also recognize my colleague who has been referred today as the outgoing MEC of Economic Development, MEC Lebogang Maile, for his stewardship of the economic development portfolio. Transitions of this nature require continuity, institutional memory, and a shared commitment to the broader trajectory of the province. I'm grateful for the collegiality and the support that has been extended, which will ensure that we do not lose momentum, but rather build upon the solid foundation that has already been laid. I also wish to thank the CEO of GGDA, Ms. Sthembiso Dlamini, and your team. The excellence with which this conference has been delivered reflects the institutional capability that resides in GGDA and in the Gauteng Department of Economic Development. The task before us now is to carry the same discipline into the implementation of this program. Ladies and gentlemen, we convened today with a clear objective: to position Gauteng as a leading subnational investment platform on the African continent, capable of mobilizing capital, of facilitating opportunity, and translating investment into real economic outcomes. We do so from a position of strength and equally with a sense of urgency. You've heard today from various speakers that Gauteng is a significant contributor, 35% of South Africa's GDP, and it remains critical, a critical gateway into the continental and global markets. Yet growth has been subdued, investment has been stagnant, and key productive sectors have weakened. And at the same time, unemployment remains persistently high, unacceptably high, in fact, particularly among young people, and inequality continues to define the lived reality of too many in our country. Now, these are not just statistics. They should serve as a call to action for all of us in this room today, and even those who are not here. It's precisely for this reason that the Gauteng City Region Economic Growth and Development Plan 2030 sets out a clear ambition to lift economic growth to between 3% and 5% and to reduce unemployment to between 20% and 25%. Now, that is a bold ambition. But ambition alone does not deliver outcomes. Delivery requires scale. It requires increased investment. It requires coordination across government and different spheres of government. And it requires deep, structured partnerships with the private sector. And this is where confidence plays a critical role. Not just in the events like this, but as an instrument of economic transformation. This year, ladies and gentlemen, we set ourselves a target to mobilize 200 billion rand in new investment commitments. I am proud to say that we have achieved this. But mobilization of these pledges, as we've heard from various speakers today, is only the beginning. At the inaugural conference, over 312 billion rand in pledges were secured across more than 60 projects, enabling the creation of over 90,000 jobs. Cumulatively, we have now mobilized over 500 billion rand in private sector investment commitments. What becomes critical now is conversion. Commitments must become financed projects. Projects must be speedily approved. Construction must begin. We want to see cranes lining the skylines of Gauteng. And we understand as well, as the Gauteng provincial government, that our credibility does not rest simply on what we announce. It is built on what we deliver. And this is why we are strengthening Gauteng's investment ecosystem through improved project preparation, through faster and more efficient approvals, cutting the red tape, if you will, through the establishment of robust investment tracking mechanisms, and through structured aftercare to support investors from commitment to completion. Investors require more than talk. They require certainty, they require efficiency, and they require real partnership. Program Director and esteemed guests, a central theme that has emerged today is infrastructure, and rightly so. Without reliable energy, without efficient logistics, without modern digital networks and integrated urban systems, we cannot speak of reindustrialization. We cannot compete, and we certainly cannot grow. This is why we are prioritizing catalytic infrastructure linked to key industrial corridors, special economic zones, and regional value chains. Infrastructure is also not enough on its own. We must rebuild our productive capacity to drive reindustrialization. We must invest deliberately in sectors that will define the future economy: advanced manufacturing, logistics, the digital economy, the green industries, MEC Botha, and the creative sector. And critically, growth must be inclusive. It must integrate spatially and economically the townships and peri-urban areas of our province. It must enable small businesses to scale. It must equip young people with the skills required to participate meaningfully in the economy, because growth without inclusion is unsustainable. The African Continental Free Trade Agreement also presents an important generational opportunity. Gauteng is positioning itself not only as a gateway, but as a connector. connecting capital to opportunity, connecting production to markets, and connecting South Africa to the broader African economy. Now, this requires coordination, it requires institutional capability, and it requires sustained partnerships. Ladies and gentlemen, we have spoken at length about our ambitions. We have reflected on the scale of the challenge, and we have been clear about the urgency required for execution. But a conference of this nature cannot end with intention alone. It must demonstrate progress. And so before we conclude the main plenary program, we turn to the moment we have all been waiting for. This is the moment where strategy meets capital, where we start to visualize the investments that will be flowing into our province. It is therefore my privilege to present the investment pledges for the Gauteng Investment Conference 2026. We should have had a drum roll. Tech team, do better next time. Now, you'll remember I said we were targeting 200 billion in pledges, and I'm proud to announce that for the 2026 Gauteng Investment Conference, we have succeeded in securing a total of 205.6 billion rand in new investment pledges. This figure is not symbolic. It is built from a pipeline of over 90 projects across sectors and corridors with a combined value of approximately 205.6 billion rand. And what matters most is the quality behind this number. We are talking about project-backed opportunities, sector diversified, and implementation-focused. This 206 billion rand reflects a maturing investment ecosystem, one that moves decisively from aspiration to execution. And most importantly, these pledges are not abstract. They are linked to real projects, real sectors, real timelines, reinforcing Gauteng's credibility as a province that delivers. Now, you will see on the screen that what underpins these investments is a deliberate spatial strategy. Our pledges are anchored across Gauteng's key economic corridors, including the Gauteng Eastern Cape Corridor, the logistics and aerotropolis zones around OR Tambo, and our industrial and innovation districts. These corridors are not geographic coincidences, they are economic engines. Our investment pattern clearly reflects Gauteng's corridor-based growth model. Now, the Central Corridor leads with 76 billion rand, reinforcing its role as the central, commercial, and financial core. The Eastern Corridor, anchored around OR Tambo and the aerotropolis, accounts for 54.6 billion rand. The Northern Corridor contributes 41.3 billion rand and is driven by mixed use and industrial expansion. The Southern Corridor adds 26.4 billion rand, supporting industrial revitalization. This distribution also tells a clear story, that investment is not happening haphazardly and randomly. It is aligned with the integrated economic corridors that reduce cost, enhance connectivity, and improve returns. In essence, we are moving from fragmented development to integrated economic ecosystems, where infrastructure and industry and investment reinforce one another. The 206 billion rand also reflects a diversified and resilient capital base. South African investors contribute 105 billion rand, which is approximately 77% of total pledges, a strong vote of confidence in our domestic economy. China contributes 33.9 billion rand, reinforcing strategic industrial and infrastructure partnerships, and additional investments come from far and wide, from the United States, United Kingdom, Europe, and India. This balance is important. Strong domestic investment provides stability and confidence. International capital brings scale, technology, and market access. Together, they position Gauteng as a globally integrated investment destination. Now, the sector profile of these pledges reflects where Gauteng is going strategically. In terms of sector breakdowns, transport and logistics leads with 60.3 billion rand, signaling our role as Africa's logistics gateway. Property development follows at 42.9 billion rand, supporting urban and commercial expansion. Infrastructure contributes 33.5 billion rand, enabling long-term growth capacity. Energy investments total 22.4 billion rand, critical for resilience and sustainability. And manufacturing adds 14.4 billion rand, reinforcing reindustrialization and job creation. And what this tells us is clear. We are not just growing, but we are also building intentionally a productive, infrastructure-led, and globally competitive economy. Honorable Premier and fellow members of the Executive Council, ministers, deputy ministers, and leaders of business and society, when we step back and look at the full trajectory of the Gauteng Investment Conference, the scale of what we are building becomes clear. In 2025, we mobilized 312.5 billion rand in investment pledges. Today, in 2026, we are adding a further 206 billion rand. Now, this brings our cumulative investment mobilization to over 518 billion rand in just 2 years. This is a significant milestone because it means we have already achieved over 65% of our 800 billion rand 5-year investment target in less than half the time. But what is even more important than the number is what sits behind it. A growing pipeline of bankable, sector-aligned projects, a strengthening system for pledge-to-project conversion, an increasing investor confidence in Gauteng's ability to execute at scale. And as you've heard from various speakers today, the road ahead is clear. We will accelerate the conversion of pledges into implementable projects. We will expedite the removal of regulatory and infrastructure bottlenecks. And we will focus on deepening the partnerships that bring not just capital, but capability into the Gauteng province. Because the true measure of success is not just the 518 billion rand that we have mobilized. It is what that capital builds. It builds factories. It builds infrastructure. It builds logistics networks. And ultimately, it creates jobs, sustainable jobs for the citizens of Gauteng and South Africa. Our project book this year is anchored on 30 catalytic public sector projects across all spheres of government in Gauteng. Now, these are not passive investments. They are high-impact enabling projects that are designed to unlock broader economic activity. They span across infrastructure platforms, industrial zones, mixed-use developments, logistics, and mobility systems. And most importantly, they are once again distributed across the 5 economic corridors of the Gauteng city region. These projects are catalytic, and they don't operate in isolation. They crowd in additional investment. They unlock value chains, and they create multiplier effects across our economy. In essence, they are the building blocks of Gauteng's next phase of growth. In addition to the confirmed pledges, we are presenting a pipeline of investment opportunities valued at 112 billion rand. And this presents the next wave of projects. Projects that have been fully identified, projects that have been structured, and projects that are ready for investor participation. This pipeline is critical because it ensures continuity. It allows investors to engage not only with what has already been committed, but with what is coming next. This slide provides a deeper look at how investment is distributed across our corridors. As mentioned, the Central Corridor leads with 46.4 billion rand, accounting for 41% of the portfolio and nearly 70,000 jobs. The Northern Corridor contributes 23.5 billion rand with strong mixed use and industrial expansion. I saw the mayor of Tshwane was here earlier. I trust that will be good news, Executive Mayor. The Eastern Corridor delivers 20 billion rand aligned to logistics and aerotropolis economy. The Western Corridor at 12.7 billion rand reflects growing industrial diversification. And the Southern Corridor contributes 9.5 billion rand, supporting industrial revitalization. In total, esteemed guests, we are talking about 32 projects, 112.1 billion rand in value, and nearly 165,000 jobs. And this distribution, once again, reflects a balanced, multinodal growth strategy, ensuring that economic development is both concentrated, where it's efficient, but distributed and inclusive. Ultimately, the purpose of investment is impact. From this pipeline alone, we are able to estimate the creation of 165,000 jobs. And these are not just numbers. They represent households that are supported, skills that are developed, and communities that can now be uplifted. Importantly, these jobs are tied to sectors that are productive, that are sustainable, and represent the future growth trajectory of the Gauteng province. We are not only creating employment, we are creating economic participation. We are instilling dignity and long-term opportunity. And this is how we ensure that the Gauteng economy not only grows faster, but is also more inclusive and transformative. As we conclude this main plenary session, we now transition, honorable guests, to the next phase of this conference. The action dialogues and sectoral roundtables are a continuation of this discussion, and I'd like to believe a deepening of it. Now, that is where the detail must now emerge. That is where the partnerships must be sharpened, and where the practical pathways to implementation must be defined. I encourage all participants present today to engage with these sessions and to network and meet other like-minded business people and delegates. Across infrastructure, digital transformation, industrialization, logistics, tourism, and the creative economy, the objective remains clear: to translate commitment into implementation, to strengthen collaboration, and to ensure measurable progress and impact. So I wish you a productive and impactful rest of the day. Before we close, it would also be remiss of me not to recognize and profusely thank our partners who have made this platform and this event possible. We extend our sincere appreciation to our sponsors, our headline sponsors, Standard Bank, Premier Foods, Bolt, Mahindra, Heineken Beverages, KSB Pumps and Valves, and Energy Venture Capital. Can we give them a round of applause, please? Your support reflects a shared commitment to the success of this conference and to Gauteng's growth trajectory. Let us be clear, ladies and gentlemen, about what this moment demands. The opportunity is real, but it requires urgency. The capital is there, but it requires certainty. The partnerships are strong, but they must be nurtured. Now, we have done the work of convening this platform. We have defined the ambition. We have mobilized the commitments. Now, we must convert and implement. To our investors, I will reiterate the words as spoken by His Excellency Deputy President Paul Mashatile. South Africa, and in particular Gauteng, is ready for business. To all colleagues, to all our colleagues from the different spheres of government, the focus must be on execution. Faster decisions, faster approvals, less red tape, and more coordination. To our finance and development partners, it is imperative that we continue to unlock capital at scale. And to all of us present today, let us remember that this is a shared responsibility. No river reaches the ocean alone. It is fed by many streams, gathering strength as it moves, until it becomes a force that shapes the land. And that is the work that lies before us. Together, we must move this province forward. Together, we must grow Gauteng. The time for implementation is now. I thank you.
Ladies and gentlemen, distinguished guests, I think our MEC deserves just a final round of applause. Thank you very much, Madam. And there you have it, 508 billion rand cumulatively across 90 projects, and of course, a clarion call to ensure that the conversion is indeed real. Ladies and gentlemen, my only job now is just to ensure that we transition in a way that helps us to understand where are we going from here and how to make the most of the second half of the conference together. I'm going to start off by inviting two photo opportunities. MEC, I'm going to invite you back onto the stage with all the other MECs to kindly please join us for a family photo, and also ask the Honorable Premier if he could kindly please join us for that photograph as well. Thank you very much. I know that my media colleagues are standing by with cameras ready. While they assume their positions, can I also just make the note that the second photo that is going to be taken is a photo for all of the investors and all of the speakers that were part of the program, including the moderators today. So I will call you up in a second. Let's make sure we've got a good gender balance. A good gender balance. I think we're good. Can I ask you just take one step forward, just almost be midline next to me? All right, fantastic. For indulging us with that photo opportunity. Ladies and gentlemen, might I kindly please invite our speakers who grace the stage today, including our investors. If you could kindly please join us for the final photo opportunity on stage. Might I ask that we make our way to the stage and transition quite quickly? So if you are a speaker today, thank you very much. Won't you please join us up on stage? Thank you very much. I see two speakers. I'm quite certain that we had a bigger program than that.